All right, thank you and welcome back to the afternoon session of the Blockchain Select Committee. Representative Western, thanks for joining us this afternoon. Appreciate that.
Absolutely, Mr. Chairman.
Joel, thanks for rejoining us.
You bet.
I'm really just testing your mics and giving Representative Western a hard time.
Both worthy dogs.
All right. And Representative Yin, if you could hear us, we sure would appreciate you joining us. No, I know you have other commitments, but you could still join us. Okay. With that, we'll move to our next topic of allowable investments. We have draft legislation, so let's start with 22 LSO 0064. David, and then you can walk us through that.
Thank you, Mr. Chairman. David Hopkinson with the Legislative Service Office, looking at 22 LSO 0064, Working Draft 4. Would you like me just to go over what's new in this draft as opposed to the last version? I believe this is our third time looking at this. At the last meeting, the committee did request some changes to be made. One of the first things we did remove, or was requested that we remove language about background checks. That has been removed from the bill. The reasoning for that was the Department of Insurance had indicated they were already running those background checks, and language in this bill wasn't necessary to accomplish that. So language to that effect has been removed from this bill draft. We added language on page 14, subsection B, which provides that would allow for unlicensed applicants to be able to apply, but their application wouldn't be considered complete until they are licensed. Then on page 16, line 9, we added just the word complete there to indicate that the 90-day timer doesn't start until the application is complete. On page 29, well, first I'll go to on page 17, paragraph 7 was added, and this is just a check to provide. There was some concern about waiving in particular statutes. So this paragraph just requires that in the case of any waiver of the particular sections listed there, that the commissioner shall coordinate the terms of the waiver with the NAIC prior to approving the waiver to ensure there's no violation of 22-25-103E, which requires that they not do anything to violate or risk NAIC accreditation. And then finally, on page 29, we did add an appropriation. And what that does there is it provides from the special revenue funds $500,000 to the Department of Insurance for the purposes of administering applications, reviews, and enforcement of the insurance sandbox. And then you've got some pretty standard language there about the reversions. The department did reach out to me, I believe, earlier this week, maybe late last week, with some concern that reversion might revert to the general fund, which would be an issue because we're dealing with special funds. So I did reach out to our budget fiscal just to clarify, and there is a suggested amendment that we have for the committee on page 29, line 18, and page 29, line 19, essentially delete as provided by law and insert in the manner provided by Wyoming statute 94207C and 921008. And that the in the manner language is there ideally to kind of capture that this would not be going to the general fund and make sure that reverts properly. With that, I would stand for any questions of the committee.
All right. It was pretty painless for a third or fourth go around.
Mr. Chairman?
Yeah, Mr. Co-Chairman.
Yeah, thanks, Mr. Chairman. I just want to make a comment that I think these revisions are really excellent in terms of addressing what I recall the concerns to be from last time that we wanted to work on. So thank you for that.
Very good. Questions committee for LSO. All right. Thanks, David.
Mr. Chairman.
Oh, Representative Western.
Thank you, Mr. Chairman. Maybe it might be because my mind is about as reliable as a spaghetti colander. Did we discuss, or was there any chatter about including like the autonomous vehicle component to this, or I might be mixing up conversations?
It does sound like something we would discuss,
I don't think we did though.
but probably not here. I don't think so, Representative.
Okay,
Western.
thank you, Mr. Chairman.
All right, with that, let's move to the Department of Insurance. And I know you have a handout.
Mr. Chairman, members of the committee, Jeff Rood with the Department of Insurance. With me is Ms. Johnson, the Deputy Commissioner. I guess since we just finished talking about 22 LSO 64 version 4, I'll just touch base briefly on that. I appreciate the changes that were made. We have no new comments. I did express that one concern with LSO because as a special fund entity, I want to be sure it wasn't like a general fund entity where they were going to sweep the money out of an account and then just reappropriate it, because that didn't necessarily make a lot of sense to me. But we'll look at the changes that were made, and then when this goes forward, if there's any concerns, we'll bring them at that time. With regards to the reinsurance discussion and the handout that I think you all have, we have continued to work with Mr. Brooks on Project Gannett, and he had proposed a couple of updates that he thought would help with his reinsurance project. And Ms. Johnson will go over that here with you shortly, but he proposed it. We sat down with the other domestic insurers because it will apply to them too. And everyone was in agreement that it was appropriate and it would be fine. And we were okay with the changes not drastically changing anything within the investment statutes that we were really concerned with. Some of our statutes are very, very old, and Ms. Johnson will comment on that. And quite frankly, it's a good thing we took a little read at them and made a few corrections. So I'll turn it over to Ms. Johnson if that's okay, and we'll go over the proposal.
Okay, Ms. Johnson.
Okay, can you hear me? Okay. Thank you, Mr. Chairman. My name is Linda Johnson. I'm the Deputy Commissioner with the Insurance Department. And as mentioned before, you should have a 3-page document in front of you, either electronically or in paper. It hopefully has a lot of red ink on it to show you where the proposed changes are. So I'll be going through that document. And as the Commissioner said, as a little background, the department did meet with our 4 domestic insurance companies and Mr. Brooks, who I thought was going to be here virtually, but I'm not sure if he's here. But we met with them over the past several
I
months.
think we have Mr. Brooks
Yeah, we got it.
virtually.
Okay, there he is. Thanks. So we met over the past several months and came up with some proposed amendments to Chapter 7, which governs the investments for insurance companies and for our domestic insurance companies. And Chapter 7 spells out the types of investments that are allowed and what is not allowed, and also any limitations on the amounts that are allowed. And a lot of these investment statutes haven't been updated since 1983. So like the Commissioner said, it was a good project to undertake just to update these statutes, because there's a lot of investment products out there in the market today that are not addressed in the statutes. And it's been very difficult for the department at times to determine if some of the investments that are out there are allowable or not allowable, because they're just simply not addressed in the current statutes. So with that, I can go ahead and walk you through the proposed changes. So on the first page, we're adding 5 definitions here in red. And it's very important that these definitions be added to Chapter 7 as opposed to Chapter 1 of the insurance code, because for an example, domestic and foreign means something different in chapter 1 than what we're proposing it to mean here in chapter 7 as it relates to investments. So just as an example, in chapter 1, when we say domestic insurer, we mean a Wyoming incorporated insurance company. But when we say domestic here, we're just meaning a US investment security. So a little bit different. So we do want to make sure these 5 definitions go into chapter 7 as opposed to chapter 1, just to avoid any potential conflicts with the rest of the insurance code. So, and I did not make up these definitions. These definitions came from the NEIC Insurer Investment Model Act. So other states probably have similar language. So, and I wasn't going to read through all of these definitions unless you have some questions. Is that okay?
Yeah, Mr. Co-Chair.
Not specifically about any of the definitions, but just looking at kind of the model NAIC Act, does this then sort of make us complete in terms of definitions, or was this more of an a la carte? We're going to take some of the definitions that are available in the Model Act.
Mr. Chairman, that's a very good question because the Model Act is about 47 pages. So we just picked the definitions that we needed for the changes that, we would need to do a whole rewrite if we adopted the entire model. So, yeah. Okay. Okay. So I'll move on to page 2 of the handout. Okay, so on the second page at the top, we're updating section 106, which discusses diversification of and limits on investments. And in general, insurance companies can only invest 5% of their assets in any one entity or corporation. And I say generally, there are some exceptions to that. But what we're doing here is we're increasing the 5% limit to 10% for investments in diversified mutual funds, because by their nature, they're diversified. So it's not like the companies are putting all of their eggs in one basket, even though they are just investing in, say, one mutual fund. So we're increasing that limit from 5% to 10%. The industry asked for flexibility in that area, and we felt that we were comfortable with that. So,
quick question.
Yeah, go ahead.
And is that consistent with what other states have done at 10%? Is this a normal practice?
Ms. Johnson.
Mr. Chairman, I'm not sure about other states. Some states have there's the defined limits version of the NEIC investments model, and then there's kind of the prudent person model. And so, some states don't have specific limits. We do have the specific limits in our statutes. So I'm not sure, and I know Blue Cross Blue Shield is behind me. I'm not sure if they did any research on that specific area. Okay. I don't think so. Yeah.
No worries. I was just curious. Thank you.
I don't think we would be out of line just looking at some of the other areas that we've noticed in other statutes or in other states. So, yeah. Okay, so the next section is section 107, which deals with authorized investments, and we're adding some specific investment products that aren't currently addressed in our statutes. So in Romanet 17, we're adding obligations issued by any solvent corporation in a foreign jurisdiction other than an insurance company, which are high-grade investments and traded on U.S. exchanges and denominated in U.S. dollars. And the 5% limit would apply here. And currently, our statutes don't specifically address these types of bonds. So we're adding them here in order to allow them. And I think these are referred to in the market as Yankee bonds. And what we're talking about here are not bonds of foreign governments, but of corporations in foreign countries. So.
So up above in definitions under domestic jurisdiction, you have the United States, any state, Canada, any province of Canada, or any political subdivision of any of the foregoing. So the definitions qualifying Canada as being a domestic as opposed to a foreign jurisdiction, which is non-domestic definitionally above. When we look down here, we're very specifically talking about US dollars and US securities laws, but you're talking about in a foreign jurisdiction. Is this all internally consistent? And this gets me wondering about the concept where they're listed on a Canadian exchange or something along those lines, where you've got one sense of Canadian equivalency. Here, we're explicitly and specifically US dollars and US securities. And I just wanted to make sure that that was thought through.
Mr.
Ms.
Chairman.
Johnson.
Oh, go ahead. Oh, Mr. Chairman, so yeah, these would have to be traded on US exchanges and denominated in US dollars, and they're also regulated, I believe, by the SEC. So even though they're Canadian, they would still be traded on the US exchanges and in US dollars. And all of our insurance companies report to us in US dollars. So that, okay. The next one is Romanet 18, where we're adding interests in partnerships or limited liability companies. If the insurer has at least 100 million in surplus and a risk-based capital ratio of at least 500%. And these investments would be limited to 5% each and 10% in total. And these investments tend to be your hedge funds, which are a little more risky and may not be as liquid. So we're just allowing these investments for the well-capitalized larger companies that probably have a little more sophisticated investment function. And then in Romanet 19, we're adding securities issued by an exchange traded fund or an ETF, and providing that the 4 conditions there are met. And also the 5% limit would apply to each ETF as well. And then if you go over to the next page, page 3 of the handout, in Romanet 20, we're adding language here that states that the aggregate amount of foreign investments shall not exceed 20% of the insurer's admitted assets. And this language is actually already in our statute. If you go back to page 2, you'll see the language that I struck out is in section 107. And I put it in its own paragraph just to kind of set it apart to emphasize it a little better, because now we're not only allowing foreign stocks, we're allowing foreign bonds. So I didn't know if it was appropriate to be in that paragraph that it previously was. So, and I will tell you, we did research on foreign investments years ago when we put that limit in there, that is in line with the NEIC model in a lot of other states, that 20% limit on foreign investments.
Mr. Co-Chairman.
Looking at the percentages, as your portfolio valuation changes in different classes of portfolio, when you have hard limits, imagine, for example, that I set a 10% portfolio value on one particular fund that you were amending to allow up above. What was that? Was that a mutual fund or? Anyway, so I'm allowed to, yeah, it was a diversified mutual fund shall be limited to 10% of the insurer's admitted assets per fund. So I peg it at 10%, but because of different appreciation rates in my funds, it ends up being 11% next year. You know, I assume elsewhere in statute, you've already got covered all of the concepts of what I'm supposed to do in that circumstance and how I might have to reallocate. Is that true?
Mr. Chairman, yes. So we have had that situation happen where sometimes an investment, you know, when they invest in it, it's below the limit, but then it just grows. It's a good investment.
Right.
And so we haven't made our companies get rid of those investments. However, we do make them non-admit them on their statutory balance sheet. And I can explain the whole non-admitting process.
So they have to exclude the portion that's
Yeah.
above the 10%,
Yeah.
and it's not counted towards the
Yeah.
overall.
Yeah, because
denominator.
it's not.
And so that's how you handle it. No worries. Sounds good. Thanks.
Okay, thank you. Okay, so the next section is section 110 on page 3, and this deals with miscellaneous loans and investments. And we refer to this internally as the bucket clause because it's kind of a catch-all for anything that isn't expressly permitted in Chapter 7. So currently our domestics can invest in these types of investments up to 5% of their assets with no more than 1% in any one individual investment. And so what we're doing here is increasing the bucket to allow larger larger insurance companies that again have at least 100 million in surplus and a risk-based capital ratio of at least 500%. We're allowing them to go up to 10% with no more than 2% in any one investment. So again, we're giving those larger, well-capitalized companies a little more flexibility with their investments. So, okay. And then finally, the last item here is in Chapter 24, Section 129. So this one is not in Chapter 7, but it's in our domestic insurer chapter, which is the chapter that governs our domestics and how they're organized and some corporate governance requirements that they have to follow. And one of the requirements for our domestic insurance companies is they have to have their assets in Wyoming. And I know with everything being electronic, that sounds maybe kind of like an archaic requirement. However, any receiver will tell you that when an insurance company goes insolvent, it's a good requirement to have because it's much easier to corral those assets and pay policyholder claims if all of the assets are under your jurisdiction. So we don't have a problem with this statute, but when we met with our domestic industry, they indicated that there may not be a lot of competition among the financial institutions that have a physical location in this state, and that they may not be able to comply with all of the reporting requirements, and the fees may be a little higher. So we wanted to give them an avenue to request permission from the commissioner to possibly move or to use an out-of-state custodian if it's warranted. And I tried to put some guardrails in this language. Just, like say, if they can prove that there's not adequate technology to help them with their financial reporting, or if the fees are cost prohibitive, we can work on that language. Those are just two examples. We might want to change that language a little bit to put including but not limited to, because there may be other issues out there. And then also it gave the commissioner the ability to call those assets back to Wyoming as well. Like if we did have a bunch of financial institutions that could provide this service. So I know this language isn't perfect. It's just something I tried to come up with to give an avenue to the companies to request relief from that requirement if it's warranted. And I know we have, like say, our one of our domestics here that could probably speak to that more than I can, because I don't deal with the financial institutions directly. So they might be able to speak on that issue. And that's all.
Ms. Johnson, just want to circle back to the very top of the document where you discussed the domestic jurisdiction and the foreign jurisdiction definitions in the Chapter 7 being different than the definitions in, I don't remember what it was, Chapter 1 or Chapter 2. Mm-hmm. Is there, and maybe this is a question for David, but I'm just curious if there's another way to do that. It feels problematic in my head to have definitions different within a title. Generally, within across all of the statutes, I feel like it could lead to potential unintended consequences or issues in a litigation scenario, particularly inside of a title. I know the statute is clear enough that it says it only applies in this chapter, but I can see it being used in various ways to support, well, it's defined this way in another chapter in the same title in this context. I just wonder if there's another way to do that.
Mr. Chairman, I think I will defer to the LSO on that issue. And I can't think of any specific examples right now, but I believe, several chapters in our insurance code do have definitions in them that may differ from other chapters. So I think we've already probably done that throughout the Title 26, but yeah. Like I said, I can't think of a specific example.
That's because our corporations committee is too busy already to clean up insurance code every year. Okay, well, I'll just brainstorm with LSO on it. That's fine. Representative Stiff.
Mr. Chairman, Ms. Johnson, on your proposed new section 129E, it looks like there are two requirements to request the exemption from holding your invested assets at a Wyoming institution. The applicant would have to show both that the Wyoming institution did not have adequate technology to support the insurer's required financial reporting requirements, and the fees would not be cost prohibitive. The fees would be cost prohibitive to stay in Wyoming.
Yeah.
Do you mind, because I'm just not familiar with it, what would be an example of when a local institution just wouldn't have the adequate technology to support financial reporting requirements? Because I can see the local bank saying, well, of course we do. We've got a computer, we've got a spreadsheet that you can use. That's adequate. Thank you.
Mr. Chairman, and again, I might defer to Blue Cross because they are here, but I can just, and I know you probably can't see this from where you're at, but this is just one page. So every year we get an annual statement from our insurance companies that lists every single investment they own. And there's 18 columns of information per investment that they have to report. So there is a lot of information. And again, the Blue Cross can probably explain to you the interface between the financial institution and their financial reporting software. But I've also heard of like issues, maybe some financial institutions may not offer lockbox capabilities or those kinds of things. So I think I'd feel more comfortable deferring to the industry on the actual issues that they see.
Further questions, committee?
Mr. Chairman.
Yeah, Mr. Co-Chairman.
So one other thing that I was expecting some language around, and I'm curious whether it's, I think we had some discussion before that maybe some things could be done with rule within the existing statute, but I just kind of wanted an update, was the idea of obligations for reinsurers versus traditional consumer facing insurers, where the consumer protection statutes and requirements and regulations and obligations for a consumer engaged insurance entity are essential. But on the reinsurance side, it really is more about assets and liquidity and the business to business, insurer to insurer relationship, which really doesn't require any of these consumer obligations. Do we need statutory revision to ease those burdens if you're strictly working in the reinsurance space, or is that something that can currently be done through rule and regulation at this time based on existing statutory obligations?
Mr. Chairman, so like, I don't know if you're referring to like our unfair trade practices chapter. So that really wouldn't apply to reinsurers because they wouldn't be dealing directly with consumers. So I don't know that we would need to rewrite anything. It just wouldn't apply, if that makes sense.
Mr. Chairman, follow up. And yeah, that was the concern, and that kind of is the question. And is there anything that would apply even though it doesn't need to apply, just because we've written the statute in such a way that it obligates all insurance entities to fulfill, jump through certain hoops, even if they never engage with a single consumer. But we statutorily wrote it that way. That was one of the early discussions we had. And I think it was our first meeting in this topic area quite a while ago, was exploring whether we needed statutory revision there so that unnecessary obligations on reinsurers were not placed because of just legacy statute that assumed an insurer is an insurer and therefore will apply it to everybody. So we might not have an answer right now that's definitive, but I wanted to inquire, and Mr. Brooks, I'll invite him to provide any testimony he has when we give him opportunity for public comment. But if you have any more thoughts on that, it sounds like there's an expectation that we don't have much of a problem there, hopefully.
Mr. Chairman, Senator Rothfuss, yeah, you are correct. I think most of the consumer protections actually specify they are for consumers, so involving the policy. So if an insurer wants to only deliver documents electronically, they have to get permission before they do it, that sort of thing. And that really wouldn't apply in these cases because it doesn't have, it doesn't specify affecting a consumer. But it's a valid question, and I'm certainly happy to work with Mr. Brooks and talk with him about that and see if there's something between now and the session that might be of interest.
Anything else from the department?
We're good, sir.
Okay. It was almost a perfect segue to Mr. Brooks. I think that was planned. Mr. Brooks, welcome.
Thank you. Thank you, Mr. Chairman. Can you hear me okay?
We sure can. You can, after you introduce yourself, comment on Sandbox, or if you want to just go straight into reinsurance, you certainly can. We can move to that that's basically what we've been talking about, so.
Sure. Thank you, Mr. Chairman. My name is Raymond Brooks. I've been working with this committee for nearly a year now on exploring various ideas to attract reinsurance to the state of Wyoming, working with the Department of Insurance, Commissioner Rood and Deputy Commissioner Johnson. I think, as a general comment, I think that the work that the industry did with the Insurance Department on investment guidelines really helps Wyoming level set with some of the other key states that are attracting insurers and reinsurers. And so I think that that's a big step forward. I also think that, the state, the legislature and the governor have signed in the Reinsurance Act 785 and 786. I think 786 was just adopted. So I think that level sets the state with a lot of other states that might be attracting reinsurers. And so I think at this point, our best course of action is try to get the first applicant in process, get up and running, and then we can start to fine tune some of these aspects that we talked about today. It feels to me like if I were to do a survey of the key states, Wyoming would come out at least as favorable. And that's really because of the investment guidelines and the Reinsurance Credit Acts, both of them. So I'll pause there and see if you have any questions.
Questions for Mr. Brooks? All right. You can keep going if you'd like.
Well, I don't know how much more I have to say. I think we've done a lot of work. It's distilled down to what's in front of you. And I think that if we can carry forward these investment guidelines, I think we have a pretty competitive landscape.
Mr. Co-Chairman.
Thanks, Mr. Chairman. Mr. Brooks, I will ask if there's anything along the lines of the consumer facing versus insurer to insurer that we have in statute that is onerous unnecessarily that you see or have experienced.
So I think that time will tell. Unfortunately, we'll get into it with the first applicant and we'll figure out in execution. I think I want to set your expectation that I think that the primary difference is going to be some of the code requirements around being fully staffed in the state versus maybe a reinsurer might be a global enterprise and have its US operations in the state and might have a Bermuda operation. So we'll have to see how that goes. I think that the NAIC model code 75 and 76 do a good job of setting up collateral and trusts. And that's important in the reinsurance space. So I feel like the code is updated there. So it will be, I think, Senator Rothfuss, I think it's going to, when we come across these issues, I think it will be largely administrative in nature. And my hope is we'll be able to work with the department and work through some of these things.
Mr. Chairman.
Representative Stiff.
Mr. Chairman, Mr. Brooks, I wanted to ask you a similar question about the proposed new Section 129E with respect to allowing the insurers to hold their assets in other states. How important is that provision in your view to attracting reinsurers to Wyoming? And what would it mean to attract them here if all their money is in New York, Florida, or Switzerland?
Yeah, I think, it's an interesting question and I'm sensitive to it because we want to participate in creating an ecosystem in the state of Wyoming. I think that the primary need for that section is, if you look at that, Deputy Commissioner Johnson held up that Form D. If you look at that form, a lot of insurance, especially reinsurance companies, have to report, not necessarily regulatorily, but to their counterparties. They have to report that sort of information on a monthly basis, not just annually. And there has to be like a quarterly valuation. So I think it's really a technology around having a custodian that has a pretty strong insurance practice and the right insurance softwares to monitor, test, and report. And so I guess I want to bring the conversation back to Wyoming versus not Wyoming. My sense is everybody would like to participate in Wyoming. It's a question of, do the local custodians have the proper technology and administrative services? And if not, what can we do to help them implement those services?
And Mr. Brooks, I guess the way I would see this provision unfolding is, if you had a industry member who, let's just say, was slightly nefarious and gamed the system, and then we have subsequent industry members who do hold their assets in Wyoming, the provision does allow the commissioner, figures that out. Okay, commissioner can now vacate that exemption and say, nope, you have to be in Wyoming. So it's kind of, I guess that's the way I see it unfolding in a positive light, if there were that one actor who is really trying to skirt around it. But then I think to Representative Stith's, the second part of his question is, and I guess we can't know until we know, but if we have 10 applicants and all 10 applicants have to use the exemption, then we have another problem, I guess.
Yeah, I mean, we should look at that as an industry. I think it's the ease of administration would be if we did have services within the state. And, we have new banks coming to the state that do have insurance custodial services. So I think I don't know that I'm answering your question directly. In fact, I'm pretty sure I'm not, but I guess my visceral reaction is we should work together as an industry to make sure that we have these services within the state.
Anything else, committee? All right. Appreciate it, Mr. Brooks.
Thank you. Happy holidays.
Hey, thank you. You too. All right, back into the room. Blue Cross, you've been referenced 4 times. Maybe you. I don't know if the area is big enough for all of you to come up, but whoever needs to come up can come up.
Well, Mr. Chairman, thank you. I guess I'm going to, she came up with me. Members of the committee, thank you very much. My name is Lois Huff, and I'm the Vice President of Finance for Blue Cross Blue Shield of Wyoming here in Cheyenne. And this is Sandy Adam, who is a manager in our finance area at Blue Cross Blue Shield too. And she's actually the technical person that can probably answer the technical questions on these changes. But we basically just wanted to come up here briefly and ask for your support of these changes. This was a collaborative effort that we made. Started this a few years ago when we talked about some of the frustrations and challenges that we have. And the Deputy Commissioner mentioned the definitions and some of the confusion around the definitions on whether something is allowable or not allowable. And we've had a lot of conversations with the Department of Insurance over the years trying to figure this out. And as new investment vehicles became available to us, and whether those and when they weren't defined by statute or not, they always fell into that bucket clause, and that caused a few limitations for us. So we worked with the Department of Insurance over the last couple years, putting this together. I think it's a fair balance between keeping the risk level at a low level that makes the insurance department, the regulators happy, that protects our consumers, but yet it gives us some flexibility as the industry to earn a little bit more on our investments, which helps the consumers too, if we can earn more on our investments while keeping them safe. So I would just a couple of specific things. You talked about other states and Sandy was unwilling to pipe right up, but we did look at, Sandy did most of the research on this, and we did look at several other state statutes. I don't remember specifically on that 10% change which state we might have pulled that from, but the changes that we had proposed and worked with the insurance department here all fell within the different states that we did look at. So I would just make that. The deputy commissioner explained all of the rest of the changes that we'd like to make. In 2624-129 on the Wyoming banking question, what happened to us a few years ago, there are actually only 2 banks in Wyoming that were available to us that had the custodial services, the capability to handle the accounting for our investment portfolio and the custodianship of our investment portfolio. A couple of years ago, and we had selected one of those banks as our custodian, been our custodian for many years. And a couple of years ago, they sold their custodian business to an out-of-state company. And so at that point, we were limited to just the one remaining bank in Wyoming. And we use that bank. We're very happy with that bank. They're doing a great job. Their fees were reasonable. But it just made us think that, there should be some provision in here if that bank happens to sell its custodial business and we will have no bank in Wyoming that's able to provide the service for us. What would we do in that situation? And I do think that the language that the deputy commissioner has inserted here does give some protection, but some flexibility to us if we were ever in that situation. So that's really all I wanted to say. We sure appreciate the time, committee, and would ask for your favorable consideration of these changes. Thank you.
Ms. Huff, just on that subsection E, then so you don't think it's too restrictive to require both the financial fee necessity provision and the technology support provision? They should both go hand in hand.
Mr. Chairman, I do believe that that's okay. I don't have a problem with those 2 requirements. I would expect that we want, it's always been our intent. We use a local bank for all of our deposits. We would want to keep this in Wyoming, and we would want to make sure that we didn't move it out of Wyoming just because the fees were too high. Certainly, if there's not another bank that can handle our custodianship, doesn't really matter what the fees are, we'd have to get the exemption to move out of state. So we don't have a problem with that provision and requiring both requirements.
Mr. Co-Chairman, do you have something?
No, thanks.
Committee? All right, Ms. Huff, thank you.
Thank you.
Further public comment on reinsurance? No? And I don't think we have anybody else signed up in the digital world. That's all I see. Last time I looked. Yep. Okay, with that, I'll close public comment. Committee, what is your pleasure?
You want to do insurance sandbox first?
Yeah. What's your pleasure on 22 LSO 0064?
I'll move 22 LSO 0064.
I'll second.
Okay. Something about the right side of this room.
Yeah, I know.
Moved by Senator Rothfuss and seconded by Senator Cost. Discussions. We have some staff comments.
Let's see. Mr. Chairman, I guess I would ask, I think we've got everything decided that needs to be decided in this draft, but I would ask David if there's anything that we need to address. I think this draft has everything clean, if I'm not mistaken. Other than some removals of bracketed text, etc. Is that accurate?
David?
Mr. Chairman, I do think that's accurate. There would need to be just a little cleanup, obviously removing the staff comments, taking out some of those bracketed languages that we don't typically put into the bill drafts. I did have that amendment that I'd suggested
Yeah,
on page 29. I can walk through
Mm.
that through the committee if they'd like, but it's just basically deleting as provided by law and inserting in the manner provided by Wyoming statute 94207C and 921008, and that would be on lines 18 and 19.
so moved.
And seconded by Senator Cost. Okay, discussion on the amendment. Question on the amendment. All those in favor of the amendment signify by raising your hand. All those opposed. That amendment is adopted. And that should be it.
Yep, and Mr. Chairman, just a little bit of discussion. The concerns that I think we've heard over the last few times of going through the legislation related to NAICS accreditation and exclusion of some of the provisions that would be potentially eligible for waiver on pages 5 through 11-ish. I think the change in this bill draft that ensures that the ones that are of the highest concern would only be waived or amended through coordination with NAICS directly and effectively getting permission to ensure that we're compliant. I think that's the key to making this draft work, and it addresses, to my understanding, all of the key concerns that we've heard. So I think with that in place, we're in a pretty good position with this bill draft, and I appreciate the work over, I think, at least 3 committee meetings on this one. So good bill.
And we don't want to work it over a 4th committee meeting, huh?
No.
Okay,
3's good.
all right. Welcome back, Senator Nethercott. Yeah. Just in time too, because I'm going to call the question on 22 LSO 0064. Please call the roll.
Senator Furphy. Senator Cost.
Aye.
Senator Nethercott. Representative Stiff.
Aye.
Representative Western.
Aye.
Representative Yin.
Excused.
Co-Chairman Rothfuss. Chairman Olson.
Aye.
That passes.
We're having good luck today. Okay, is Mr. Birmingham? I'm just wondering if we can keep pressing forward, but we're literally an
Mr. Chairman.
hour ahead of schedule.
No, but we do need to take action on the
Oh, wait, you want to take action on reinsurance?
reinsurance, yeah. Also.
Okay, yeah, that would have been a lot of time spent for not. Mr. Brooks almost had a heart attack.
And Mr. Chairman,
Okay,
I think I would just, without objection, from the committee, ask that this language be drafted into a bill for our consideration at the January meeting, and give all the necessary flexibility to staff to ensure that it properly conforms with statute and amend as needed while working with the Department of Insurance and stakeholders.
committee, does that sound good? All right, another bill. Now, Mr. Reveal, please.
Thank you, Mr. Chairman. I just, if I may, I wanted to add a couple of, or maybe plant a couple of seeds for the future and possible amendments. I think it's, first of all, great work by Mr. Brooks and the Insurance Commission. Great bill. I think there are a couple of thoughts I just want to share on it. One is some feedback from folks that are participating in the digital asset industry that had made recommendations that we consider what has been done in Bermuda recently to incorporate digital assets or digital asset clauses into the language. In consulting with the commission and with Mr. Brooks, I think it was decided that was best left for a future date, but I would just sort of leave that thought with folks or plant that seed with folks. I think that's an unmet demand in the industry and growing. and one that we could be uniquely positioned to address given our treatment of digital assets as property under Wyoming law. And then the second comment I wanted to share is I think the right decision was made with regards to not requiring that custody be held in Wyoming and being overly prescriptive there when viable options are not available. But at the same time, should this lead to significant growth of reinsurance in Wyoming, I think it would be a shame to not have some incentive to have a custody business growing up alongside it. So to the extent, and I was sitting here sort of racking my brain trying to think of an articulate way to say this, but I just think if there's some way to encourage or incentivize custody in the future without making it overly prescriptive, that would be a good thing for the state. Thank you, Mr. Chairman.
Go ahead.
Following up on Mr. Ville's first point regarding digital assets as permissible investments, it's my understanding, and I'd have to read the details, but the 26.7.110 miscellaneous loans and investments has the catch-all bucket. I would suspect that a digital asset would potentially be a viable investment under that to not exceed 2% for any specific investment. But I guess I'll ask if I'm interpreting that correctly, that the catch-all bucket language, and that's the new language, would be 2%. The prior language would be an aggregate 5%, not to exceed 1% for any asset. And I'm remembering that from a couple of years ago. I feel like this change was made where we explicitly included digital assets as a class of miscellaneous alternative investments or whatever it's called. I have head nodding. So as I understand it, this would change that from what is currently a 5% aggregate 1% to 2%, 10%, or 10% aggregate 2%, and still anticipate digital asset investment for those classifications. So am I getting that right, everyone? I'm in the ballpark, maybe.
Sorry. Mr. Chairman, so digital assets were added in section 107 of chapter 7. I can't remember, 1 or 2 years ago. So it is an authorized investment. So we would hold it to the 5% because it is specifically addressed in statute. So it's not in that bucket clause because it is addressed. The bucket clause is for those items that are not expressly permitted. And this is expressly permitted. So we would hold it to the 5%.
Gotcha. My apologies. Yes. Thank you for that clarification. So this doesn't amend that. It's a 5%. And out of curiosity, how would that be interpreted? Is digital assets as a class, that's an asset class up to 5%, regardless of what digital assets I'm holding? Is that accurate?
Mr. Chairman, the way the wording is, it's any one like entity or corporation. So if each digital asset was in a different entity, I mean, I'm not a digital asset person or expert, but if they were invested in different digital assets, like Bitcoin or Dogecoin or whatever. So if they're different entities and if one failed, the other one wouldn't necessarily, because they're two different entities, then each one would be at 5%.
Okay, thank you.
Does that make sense?
Yeah, absolutely. I appreciate the clarification. Thank you so much. And I see Joel's hand is up also. So
Joel?
Thank you, Mr. Chairman. Mr. Co-Chairman, thank you for that. And I'm glad we ran that through on the investment side. I was actually referring to the coverage side. And I think Mr. Brooks could do a better job of articulating what the demand and the need might be for coverage from a reinsurance perspective for those who are participating in the digital asset industry. If I might yield to Mr. Brooks here.
Is that okay?
Yeah, sure. Certainly, Mr. Brooks. Go ahead.
So Mr. Revelle and I were on an email chain along with the insurance commissioner and deputy commissioner around some ideas that are coming out of Bermuda to offer reinsurance coverage on the actual underlying digital assets, if you can call them underlying, I suppose. And I think that's where we're going with the conversation. And the thought is we didn't have enough time in this session to introduce that idea because it's going to take some analysis, but maybe I think the idea is that maybe in the future we could explore whether or not digital assets could be covered by some form of reinsurance as they are in Bermuda.
I guess my question is, why can't they already? Where do we restrict what can and can't be reinsured explicitly?
I would defer to the insurance department, but I would think that our code just doesn't conceptualize digital assets as being a line of business.
Can we bounce back?
It's been
to you?
deferred to, it's been deferred to you, and I don't think you get a deferral.
Watch the
so-
ball bounce. Yeah, you're the buck where the buck stops.
Thank you, Mr. Chairman. So if you look in Chapter 5 of our insurance code, Section 106, this is where we define casualty insurance. And so that would be what the department would need to do, is define what kind of insurance is this. And if you look in 26-5-106, it's insurance against loss or damage. And granted, this is an older section, so it probably did not imagine digital assets, but it says to monies, coins, bullion, securities, notes, drafts, acceptances, or any other valuable papers and documents from any cause. So, if you're wanting to insure digital assets against loss, it probably, might fall into our casualty insurance bucket. I hate to say that definitively, but it's just in looking at our statutes, it might fall into that type of coverage. I don't
Okay,
review the
and-
policy forms, so I thought
Thank
I'd
you.
explain
And
that.
Mr. Chairman, then there's no certainty where it would fall. And that's one of the concerns here is that we need a bright line for clarity. And that's what the discussion's been. I understand
And
that.
like I say, it looks like it would maybe fall in the casualty insurance definition, just because that would be, insurance against loss or damage to monies, coins. It doesn't say what kind of coins. So, but yeah.
Great. Thank you.
Representative Stiff?
Mr. Chairman, so Ms. Johnson, then if we amended 26.5-106 a Romanet 4 capital B, and after monies, coins, bullion, securities added the phrase digital assets, would that accomplish what Mr. Brooks is talking about, or if I missed something?
Mr. Chairman, and to the question that's been brought, I don't think that's a concern when dealing with trying to insure Bitcoin. I think the concern is if you're doing an insurance of them is what are your reserves, because Bitcoin fluctuates so much. So if someone came to me right now, and I've had a discussion with a company, with an individual that actually wanted to do just this, and we sat down and we pointed to this and we said, all right, let's start working through it. We haven't heard a proposal. So I'm not worried about the definition. That's not the gate that's keeping anybody out at this point. It's more of a matter of how we deal with valuation of assets and the resources to ensure there's proper assets there that fluctuate on an hourly basis, sometimes wildly, and how do we protect people in that situations. So that's the part that has to be worked, not this definition.
Following up on that, how would you do it for a currency that's highly volatile? I mean, a traditional currency. This is something that's been around for a long time. I assume that we would have a mechanism for that. Just imagine I'm a currency investor and I like to speculate in wildly volatile currencies that may or may not exist tomorrow.
Mr. Chairman, as our statutes are written, we deal with dollars. and you pay out in dollars. And that's how you're going to, if someone wants to set up an insurance company, they're going to have resources in dollars to meet our threshold requirements for reserves in order to ensure risks in other things, to include Bitcoin. And as I told this individual, I said, there's no amount of, there's enough dollars somewhere to insure anything. You've just got to come up with them.
So, Mr. Chairman, all right, I think I see the concern here. Why can't I insure a cryptocurrency with a cryptocurrency? And you're saying statutorily you can't right now, that you only care about having insurance reserves in dollars. So I couldn't have my reserve to provide a insurance product or reinsurance for crypto realm in some cryptocurrency. Is that accurate, or am I misinterpreting?
Mr. Chairman, Senator Rothfuss, I think with what we have, you actually could set something up to insure cryptocurrency. I just think that the company that does it has to have a large enough reserve in traditional stable assets to ensure payout. And that's what we're going to be looking at.
Okay. So what are our barriers then? It doesn't sound like there are barriers. There's only calculations that need to be done. And maybe Mr. Avila or Mr. Brooks can point to any barriers that they see, but it doesn't sound like you see direct
Mr. Chairman,
barriers.
Senator Rothfuss, I think the barrier is, can you come up with enough resources, cash, to have enough reserves to pay? I mean, if you have a Bitcoin that goes from $100 in value up to $10,000, and then if you scale that out to 10,000 people that have just made that investment, well, do you have enough resources to pay out if something else happens, if they go down? That's the concern. I think that's the one barrier.
But again, Mr. Chairman and Commissioner, there's nothing unique about this. Any security, for example, a rapidly increasing or potentially fluctuating security asset would be treated exactly the same way. So there's nothing unique about it being a digital asset where there's a barrier in statute because it's a digital asset. It's just that the volatility is the concern. Is that accurate?
Mr. Chairman, Senator Rothfuss, it is, and people do make investments that fluctuate up and down. And if some of those investments are in an insurance company's portfolio, we're going to look at the risk. And if we have to not admit it because the risk is too great, or we're at least going to ensure that it stays within those buckets, 5%, 10%, wherever it is, that's what we're looking at. And you know, we look at quarterly financials. Well, Bitcoin fluctuates hourly sometimes, depending upon what it is. So we're going to have concerns in that area. And it could go up, it could go down, and we'd have to say that's too volatile to be considered something we can rely upon.
Mr. Chairman.
Representative Western.
Thank you, Mr. Chairman. Following up on Senator Rothfuss' question, and maybe I didn't hear it or maybe I just didn't understand it, but how would this hypothetically be any different than what is currently on our books in regards to assets that are already pretty volatile in their valuation? I mean, how does that currently reflected right now, regardless of whether it's a digital asset or not, but ones that are already volatile in nature and how they're assessed, or how their valuation is calculated, rather?
Mr. Chairman, so there are different accounting rules that require insurance companies to write down the value of their assets if they go below, a certain amount. So there's different accounting rules that govern that.
Follow, Mr. Chairman.
Go ahead.
So if it's already done right now on the books right now, and you guys already deal with these types of assets that are volatile in nature and their value, I guess I'm struggling just to really see how, where's the distinct difference between this and a digital asset?
Mr. Brooks?
Yeah, Mr. Chairman, I think the answer is The distinction lies in the fact that the NAIC, the insurance industry, the Securities Valuation Office, all have some pretty robust and historical data around traditional assets, volatility, and the attending capital charges. I think what's happening I think the opening comments with Mr. Reville were, this is something that we were approached. It was an idea that we were approached with. And it may be something to consider in the future, but it's going to take some time. And I think digital assets just don't have the volume of data, or at least I'm not aware of it, in the context of insurance to understand the capital charges and the valuation.
All right. Do you want to add to it, Ms. Johnson?
Sure, Mr. Chairman. So right now, insurance companies have to follow statutory accounting principles. And right now, digital assets or, Bitcoin that are non-admitted for statutory accounting. And the reason is because they're not widely accepted by custodians or financial institutions. So right now, statutory accounting non-admits those types of assets. Because they're allowed in our statute, we would allow them for our domestics, but we would, like Mr. Brooks pointed out, we would go to the Securities Valuation Office of the NAIC. If somebody one of our domestics did invest in those assets, we would need to work with the Securities Valuation Office to assign a value to those assets. So.
All right. I feel like good conversations teed up for when we have this bill draft in front of us. So thank
Mr. Chairman.
you. Oh, you guys,
I think Joel has a question.
okay. I'll give you one more question, then we're moving on. Is you're going to have this bill in front of you in January and you can talk about it then. Go ahead, Representative Western.
I was just saying, I think Joel has a question or a comment he wants to make.
Yeah, hey, it was just a comment. Thank you, Mr. Chairman. And that was in response to the co-chairman's and Representative Western's question. I think what Bermuda has done is to just create regulatory clarity. And I'm not an expert in this matter, but I think like so much of the challenge that's going on in the United States around digital assets and the lack of regulatory clarity, what they've done is to create a new class it's a license class for insurers that is defined as a body corporate who intends to carry on general business in an innovative manner. For example, those intending to use digital assets or cryptocurrency for their insurance business. And then they've created a regulatory framework specifically for that class. That's my comment. Thank you, Mr. Chairman.
Appreciate it. All right, lots more to discuss, certainly. And the department doesn't want any more of the hot seat. I can feel it. Okay.
Thank you.
Thank you. All right.
Are we ready to do Chancery? Do we have it?
We are ready to do Chancery. Ben, welcome. Thanks for being available and able to come over early. It's not often that the Wyoming legislature is so far ahead, but today we just so happen to be.
Thank you, Mr. Chairman and members of the Select Committee. For the record, my name is Ben Birmingham. I am the Chief Counsel and Director of Wyoming's Chancery Court. Last week, the Chancery Court went live as the first state court to use electronic filing. And today I'd like to give you a demonstration of that electronic filing system. A company named File and Serve Express, or FSX, has created an 8-minute video that will walk you through the system. This video will show how a party initiates a case by electronically filing a complaint. And then after that, it will show you how a party can file subsequent filings and serve those filings. So, Mr. Chairman, if it is okay with you, I will play that video and then I'd be happy to stand for any questions that the committee may have about the e-filing system specifically or the Chancery Court generally.
Yeah, be great. Let's do that.
Mr. Chairman, it looks like I do not have the privileges to share the video. If I could be granted those by staff.
And Mr. Chairman,
Yeah, Representative Stiff, please.
if I may, while they're doing that, I wanted to share that Justice Fox made it clear to the Joint Appropriations Committee that Mr. Birmingham is not allowed to leave his position to die or to take a day off.
Ah,
He is a key person for the Chancery Court.
good news.
Job security. That's good.
Well, with that, I'll go ahead and start the video.
Filers can quickly initiate cases in File and Serve Express by following these easy steps. Hover over the Filing and Service tab and click Start a Transaction. Select File a New Case. Select your jurisdiction in the drop-down menu. Next, click Find. This will show you the case classes in your jurisdiction. Find your case class and select it by clicking the box in the column next to it. This will take you to the Case tab. Select the appropriate case type. Enter a case name and click Submit. This will take you to the Documents tab where you will upload your documents. Begin to type in the document type and click on it to select it. Title the document and click on the Choose File or Drag It Here button to open your computer's hard drive. Select your document and either double-click it or click Open to select it. Choose the appropriate access level using the drop-down and then click Attach Document to upload your document. Follow the same steps to attach multiple documents. A list of your attached documents will update as you attach them. When you are finished attaching all your documents, click on the Case Parties tab. The first party will be the initiating party. Any required fields are shown with a red asterisk. Select your party type in the drop-down menu. You can type in the party to find it faster. Select your entity type. Then enter the party name and any required information. Select your attorney and attorney type, then click Save Party. You can enter as many initiating parties as you need to by following the same steps. Next, select Additional Party. Select your party type, your entity type, and then type in your party's name and any other required information. Then click Save Party. You can enter as many additional parties as you need to by following the same steps. Your list of parties will show on the right-hand side of the screen. When you have finished entering all your parties, click on the Review and Submit tab. Select your authorizing attorney from the drop-down. You can enter an optional billing reference or an optional note to clerk. The option to authorize and file now will already be selected. Click Next. Review your transaction details. You can make edits by clicking on the Edit links. You can also view the original and PDF format of your document by clicking on the links. When you are ready, scroll to the bottom of the screen and click Submit Transaction. Once your filing has been accepted by the clerk, the case will be added to the permanent repository and will be available for subsequent filings on File and Serve Express. Filers can quickly file subsequent documents into existing cases on File and Serve Express by following these easy steps. Hover over the Filing and Service tab and click Start a Transaction. Select File and/or Serve in an existing case. Choose your state, and then choose your jurisdiction using the drop-down menus. Next, enter your case name or case number and click Find. Select your case by clicking the box in the column next to your case number. This will take you to the Documents tab where you will upload your documents. Begin to type in your document type and then select it. Title your document, and then click on the Choose a File button to open your computer's hard drive. Find your document and double-click it or click Open to select it. Select your document access type by using the drop-down menu. Then click on the Attach Document button to upload the document. Follow the same steps to attach multiple documents. A list of your attached documents will update as you attach them. When you are finished attaching all your documents, click on the Sending Parties tab. A list of parties will show on the Sending Parties tab. Select the box next to the party that you are filing on behalf of. If this is your first time filing in the case, you will need to be sure to select the attorney type. Next, click on the Service tab. A list of service recipients will show on the Service tab. Select the box next to the parties that you would like to serve. Then, click on the Review and Submit tab. Once you are on the Review and Submit tab, select your authorizing attorney from the drop-down menu. The option to file with the court and serve selected parties will already be selected. There are also serve-only options for filings that do not need to be sent to the court. You may enter an optional billing reference or an optional note to the clerk. The option to authorize and file now will already be selected. Click Next. Review your transaction details. You can use the edit links to make changes as needed. You can also see the original format and PDF format of your documents by clicking on the hyperlinks. When you are ready, scroll to the bottom of the screen and click Submit Transaction. Once your filing has been accepted, it will be added to the permanent repository on File and Serve Express.
So, Mr. Chairman, thank you for giving me the chance to demonstrate the e-filing system. I'd suspect based on that demonstration, there may be some questions. I'd be happy to stand for those questions now.
Actually, Ben, based on your presentation, I'm ready to present a bill draft to change the jurisdiction to open it up for all state cases, so I can e-file all my state cases in there. That's pretty cool. Representative Stith.
Mr. Chairman, Mr. Birmingham, is there a pay-to-play feature or a filing fee charged with respect to each document you file, or how do the filing fees work on this system?
Mr. Chairman, Representative Sith, currently no. In the Chancery Court, there's one initial filing, that's $610 to file a case, and there are no additional filings for subsequent filings. There's no additional electronic filing fee.
And was that through, so do you go through a website, or do you have to have an app? Do you have to download something specific to your desktop, or do you just go through the website?
Mr. Chairman, you go to your website. So once an attorney or a law office staff has completed the training, register for the system, that filer will be given a login username and a password, and then can visit the system online, enter those credentials, identify the court and the case, and then submit filings.
Is there a public portal for it available in a facility?
Mr. Chairman, so currently parties to a case can access all filings in a case remotely via File and Serve Express. But the judicial branch is currently working with File and Serve Express to establish the option for remote access. That is where individuals, members of the public, can obtain credentials to access the system and then search for and download publicly available documents, very similar to how this works with PACER in federal court. In addition, these documents will be available at the public access terminals in the court. And the Chancery Court is also developing a system that will place the published Chancery Court opinions on the Wyoming Supreme Court's website or the Chancery Court's website to make those available.
Will there be a terminal in that Casper office?
Mr. Chairman, that is the plan, yes.
I'm assuming when I hit the submit button, I probably get a confirmation email that tells me it's pending the clerk's review, and then I'll get a subsequent email from the clerk, or a subsequent email from the system telling me the clerk has approved the filing.
Mr. Chairman, so there are two ways for a filer to receive notifications in the electronic filing system. When you log into your account online, there's an online inbox, and that inbox will submit notifications for when a filing has been accepted or when a filing has been served upon you by another party. Additionally, though, parties can opt in for courtesy notifications, where those notifications will go to the registered user's work email address. So I guess the answer to your question is yes, there will be email notifications that filers can access in two ways to receive notification of filings.
You may have answered this in Representative Stith's question. So in PACER, when I get served a document, I get one quick free look. And then if I fail to get it downloaded and put into my system, I've got to go back and I've got to pay to look at the pleading the second time. Is that similar in this system, or once it's been served on me, I can log into that portal and I can access it 1,000,000 times at no charge?
Mr. Chairman, once you have entered an electronic appearance and are on a case, you can access any documents that have been filed on that case for no charge.
And the same is true. I can search, so I have to have entered an appearance, but so I can't just go and search for other cases and look at pleadings in other cases.
Mr. Chairman, not now, but the Supreme Court is working with the vendor to establish a procedure by which people can search for filings in the e-filing system. There will be a charge associated with those searches and downloading the documents similar to Pacer. But the goal is to ultimately have remote access available on the e-filing system.
Senator Nethercott?
Thank you, Mr. Chairman. It looks wonderful, very exciting. You indicated that once it's filed or submitted, it has to be accepted by the clerk. And so can you explain what the clerk actually does, and can the clerk reject a document? And does that mean only filings occur between the hours of 8 to 4 when the clerk is present, or what does that look like?
Mr. Chairman, Senator Nethercott, I'm glad you asked this question because it underscores something I really should have clarified, and that is electronic filing requires two systems: an electronic filing system, or FSX, which we have just witnessed. That's the public facing system that lawyers use to file documents. But there's a second system, a case management system, and that's the system that the court uses to manage these documents. So once the document is filed in File and Serve Express, that document will be sent to the case management system used by the court, used by the clerk. That system is called Full Court Enterprise. So the clerk will receive a notification that something has been filed, and the clerk will have the opportunity to review that filing and accept it. In the rules, the ability for the clerk to reject documents is very limited. And the thought is that this will protect confidential information from being made public by inadvertent filing by an attorney that failed to redact documents. Now, once the clerk accepts a filing, the filing will receive the stamp and the time of filing, and this timing will be based not on the time of this filing will be based not on the time of acceptance, but on the time of filing by the party. So let's say that an attorney files something on Friday at 5 o'clock, and the clerk does not accept it until Monday at 8 a.m. The time of the filing will be Friday at 5 o'clock, if that makes sense. And I should point out that the Chancery Court, through the e-filing system, will accept filings up to 11:59 p.m. Now, I also want to note here that that's how the system is configured. It's configured to require clerk review. That's common in most states that have electronic filing systems. But we are exploring with the vendor whether it's possible to eliminate the clerk review process, or in other words, to have a quality control process on the back end, so that once something is filed, it's publicly available. But to give the clerk the opportunity, if the court catches something that hasn't been redacted, to notify the parties and pull that from the public document, or the public docket.
Mr. Kaufman.
I was wondering if you could let us know maybe what that process is going to look like to replace him.
Mr. Chairman, Mr. Kaufman, you are right. We have lost Judge Fenn, who was recently appointed to the Supreme Court. We're very grateful for his contributions to the Chancery Court. The current plan is to proceed with the other two district court judges, Judges Fenn and Lavery. There's nothing statutorily required or magical about the number 3. And if we find that these two judges are not, if the work is more than they can handle, then by statute, the Supreme Court can assign another district court judge or assign a retired judge. So the thought is to proceed with the two judges, and if we need it, then to look at appointing another district court judge or a retired judge.
And bouncing back to the filing process, I guess I'm a little confused on why it has to be so different from, for example, the Pacer system. And I guess it raises some concerns in terms of the review process. If I submit something in Pacer and I file a 30-page pleading, and on page 22 in paragraph 3, line 5, I failed to redact something, there's not a clerk on the other end that is going to comb through those when I filed it at 11:58 on the day of my statute of limitations. They're not going to comb through that and then this is a Friday, and then on Monday, email me and say, sorry, it wasn't accepted. The redaction responsibility is on me as the attorney. It's part of the rules. I have a responsibility to redact. If I fail to do so, I violated the rules. And I can be held liable against my license, but also if there's a liability caused by my negligence in failing to redact. So in terms of quality control, in other practices in the state of Wyoming, that's always been held within the bar itself, the attorney itself. Similarly, if I file something right now in state court and I'm there at 4:58 and I'm handing a significant pleading, no one's combing through my pleading to make sure they're making sure I've got, quality control to me on this system is making sure I put the plaintiff's name in right and the defendant's name in right. And I didn't reverse something in your system that fails it to go through the system. I would like to think if we're spending money on a system, it already has that capability. It says, sorry, you failed to put something in this box. You can't be submitted. So maybe explain to me why that system has to be so different from the quality control as you described it, from the existing state paper system and then the federal system when I file.
Mr. Chairman, I'm happy to address that question. And you are right. E-filing in state courts is different from federal courts in this respect of clerk review. I guess the simple answer would be these are off-the-shelf systems that are used in other jurisdiction. So that means the configuration, the way these systems flow in Wyoming is based on how these systems were provided to the state. And off-the-shelf provides certain benefits. It provides a system that's proven. It provides a system that is more affordable, but it does make customization difficult and more expensive. And we are certainly aware of these concerns. As an attorney, I share these concerns. I don't love a clerk rejecting my filings. And I completely get that the onus and responsibility is on the attorney filing the document to make sure those redactions happen. But as I stated earlier, we are exploring with the vendor whether it's possible to remove the clerk review. And this is a current topic of discussion by the Electronic Filing Committee that is developing electronic filing rules for state district courts. So I guess the short answer to your question is, this is how the systems came configured, and we are looking at making adjustments and customizations.
So if I understand that right, it's not necessarily a policy choice that's being made. There's not really a button that you can just go in and click in the software and say, we don't want clerk review. It's your vendor. There wasn't a purposeful policy choice being made that says, we're going to quality control check all the filings by clerks before we give it the green light.
Mr. Chairman, for Chancery Court, I think that's correct, just because we're on such an expedited timeline. We didn't have as much time to put this in place, so we're using the systems as they were available with limited modifications. But this is a policy discussion that's occurring in the e-filing committee right now as they develop those rules.
Senator another cut.
Thank you, Mr. Chairman. Mr. Kaufman, are you on that committee? No? Yeah. And Mr. Birmingham, I know that you're just a messenger here. And this conversation has been ongoing with myself and the clerks concerning this issue for a long time. Finding the need to redact lawyers' documents absurd. And that is certainly not occurring on the ground in the courtrooms across this state ever. But now with electronic filing, there's this overwhelming concern when, as the chairman indicated, the duty is upon the lawyers to ensure that the documents that they submit and file with the court are appropriately redacted. And all of that liability or exposure or risk is placed on the lawyer, and none of it is on the clerk. And so this withholding or power of whether or not a poor plaintiff is going to get relief coming up on a statute of limitations deadline or any other court imposed deadline or statute imposed deadline is dependent upon whether or not a clerk determines to accept it for those redactions is just disparate and not appropriate. And so I think one solution could be, and curious to hear your thoughts, if we do a bill draft that says the time the pleading is submitted is the time that will be considered filed, regardless of whether or not the clerk chooses to accept it, unless there's some other primary deficiency, which would justify a rejection of a filing, such as a failure to pay or not providing the appropriate paperwork as currently required under law and rule. But putting discretion for whether or not a plaintiff gets ultimate relief on a statute of limitations deadline for accepting a pleading is just too far in my mind, and goes beyond their scope of their duties now. You know, again, I have never seen them reviewing the files for those types of glaring violations that are occurring, quite frankly, all the time. And I appreciate that concern. I share the concern over confidentiality of some of these public documents and recognize the concern associated with distinguishing on a public filing system as opposed to going to the courthouse. But again, it doesn't match for me. So ideas there for a bill draft. Curious to hear the committee's thoughts and your response to that.
Mr. Chairman, Senator Nethercott, if I could address that concern, I completely understand the concern about allowing a technicality or an overzealous clerk to interfere with statute of limitations and other timing limitations, and the injury that might be suffered by a plaintiff or a defendant as a result. We have addressed this in the Chancery Court rules by stating that if a filing is rejected by a clerk, that the clerk must give the party an opportunity to cure that failure to redact or filing in the wrong case. And then if the filing is corrected, then the timing of filing relates back to the original filing time. So in other words, a rejection should not cause a party to lose any substantial rights, because the party will have the opportunity to cure any deficiency.
What's the time period to cure?
Mr. Chairman, I'd have to look at the rules, but I want to say it's 12 business hours within notice from the clerk of the rejection.
So the other real quick thing I'm thinking about, where, you know, the system of quality control is kind of similar, but your document is not rejected, is in real estate. In real estate recording, I take something down to any county courthouse in the state of Wyoming and I record it, and the recording officer accepts it, and they have to. And they have to record it, no matter what it is, whether it's a deed or some random document. That's how the archives work. However, it's stamped, it's dated, the recording took place. Then it goes through a quality control after that process. And if it happens to be real estate, it passes through a second level of quality control when it goes to an assessor for abstraction. And through that process, I may get a letter back with my deed saying I messed something up. And it may come 2 weeks later, because that's usually the speed of those various levels of government. It can take several weeks. But even then, when that notice comes back, I have no legal obligation to take a step if I, as the attorney, believe I did everything right, for example. I may not be in the wrong. So I may not have to take anything, and my document's recorded. It's out there. It's in the chain of title. And if I'm right, I'm right, and everything's fine. And if I'm wrong, I re-record. So, you know, similarly here, at least on that first step, you know, if I'm running up against the statute of limitations and I file the document and I'm right and it's accepted, to me, that's what the system looks like. And then on the back end, if there's a quality control issue, you know, certainly they could review something at that point, I suppose. But again, to me, quality control means the data is entered right, so I didn't mess up your system, not necessarily completely inverting the concept of who's actually
liable for redaction. And then I would wonder why the clerk, if the clerks would even really want that, because what they're actually doing is changing the scope of liability. Right now, it's me, the attorney. But if you reverse that and they fail to see something that's redacted, is the clerk's office should be the one who's liable for that. To me, that doesn't make any sense.
Mr. Chairman.
Yeah, oh, go ahead, Mr. Co-Chairman.
Thanks, Mr. Chairman. I obviously don't file anything with courts, but I have regrettable experience with software driving policy. And the idea that, well, this is what the vendor gave us. And so we're literally going to change the way we do things. The university procured software that is now responsible for all of our budgeting decisions and human resources decisions and all of the clicks that are required, creating this monster of bureaucracy. And the answer is always, well, this is what the software does. That really can't be the answer for our judicial system, and it shouldn't be the answer for the university, but that's a separate battle. The vendor has to come up with a solution that comports with the way we do things in the state, or they're not our vendor, is really how it should be. I realize we've got cost drivers and we've got timeline, and I appreciate the fact that we did an incredible job of getting this together quickly for the Chancery Court. But I don't think the answer can be, well, that's hard, so we're going to change the way that our legal system works because the software engineers don't want to flip a switch. And at the end of the day, it really shouldn't be that hard. I've developed a lot of software in my life, and I can't imagine an auto set of the switch is flipped, 1 to 0 kind of thing, or 0 to 1. Shouldn't be that challenging. So it seems to me that this is one we just fix and tell the software folks there will be an auto approval process, and there can be, as the good chairman said, an after the fact if the clerks want to review it and then make a phone call and say, hey, you forgot to redact something. If they choose to, that's great. But the concern that it seems like we have, and from a product standpoint, the moment it's filed, there should be an authoritative receipt that's received by the filing attorney that counts. And if you don't get that, that's when you should be panicking. I mean, if your email or whatever else doesn't show up with an authoritative receipt or a rejection that says you didn't comply, you should immediately have that feedback, and then you should be able to remedy. The idea that, Monday morning, you might or might not get approval because the software doesn't work that way. And if this is a policy decision that's driving it, then we'll fix the policy decision. If this is a software decision that's driving it, that's just completely unacceptable and
Mr.
must
Chairman.
never happen again.
Isn't it true that it's a policy decision that's driving it?
And if it is, I would love to know who came up with the idea that 12 hours was the cure period. I mean, my office definitely can't, Mr. Kaufman's office is very large, has plenty of staff, and probably turn something around that quickly, but I don't know that I'm going to file something on Friday because unfortunately that's the statute limitations. Apparently I'm not going to go out of town or go on vacation because I got to be back in my office Monday morning at 8:30, staring at my computer, waiting to see if I get it, telling my staff, don't schedule anything because you may have to fix this within 12 hours. 12 hours is very interesting.
Mr. Chairman, if I may, and this really is not for you. You again are the messenger, but for those clerks that will be watching this later, right? Again, it's easy to focus on the frustrations that the lawyers are expressing, but understand the source of that frustration. One, it is our professional licenses that are in jeopardy, which are fairly important to most of us. But there's also a client, right? That also has something very important on the line. And so to go back to why this is so important is it affects the businesses and people of Wyoming and others who we want to make case law here in this state. That's who is deeply affected by that. And something that I think we can solve regardless of a vendor issue that we can address to provide that certainty to litigants and their lawyers.
Ms. Long.
Mr. Chairman, thank you. I'm experiencing deja vu here from a different perspective, which is
these recording functions where there is somebody who has to accept a filing, it really puts extraordinary power in the person who is responsible for accepting it, as opposed to making it automatic, which is really what the policy should be. And while you're describing the challenges that you face in your day jobs, waiting 3 weeks for a Secretary of State filing to be approved where I can't issue capital until it's approved is unconscionable and unacceptable.
Should be on the blockchain.
Should be on the blockchain.
Ben, that's a lot that you don't have to respond to, but wouldn't you agree? But essentially, here's what we've done for you. We've teed up such a mess for you, and we started with Representative Stiff telling us how integral you were to the court. Now you get to go back to the court and say, I'm not going back to another committee meeting to deal with these guys again. And then hopefully that results in a good raise or outcome for you. So,
Well,
you're welcome.
Mr. Chairman, if I can just say in as some concluding remarks, certainly understand and appreciate all these concerns. As an attorney, I completely get it. And I just want to reiterate that we are working on this issue. We're actively working on it, hoping to address it by a rule. So I'd leave the committee with that.
Okay. And I do think we're going to have to draft a bill on the filing stamp. I think that's the, and while you on your end continue to work with the vendor, I think the vendor solution is ultimately the right solution. But I think if it's a vendor issue, it's a vendor issue. If it's a policy choice, I think there's got to be a lot more conversation, a lot more stakeholder input, both from, and I think no better place to have that conversation than in the Wyoming legislature, I suppose. So. Ms. Long?
Just a follow-up question. Who puts all of these systems together? Is it EFS? And can we address some of these registry systems that can be addressed with technology? Can they be addressed together at the same time?
We could ask Ms. Butler, but all of the Supreme Court, the court systems operate outside of, because it's not a agency, it's a branch of government. They operate outside of the ETS systems. So they control their own systems, with the exception of, it's kind of complicated because I guess your district courts are not directly under the Supreme Court's systems. Ms. Butler, do you want to come up? This is the technology conversation is a long ongoing conversation here with who controls what.
Mr. Chair, Elisa Butler, I'm the state court administrator at the Wyoming Supreme Court. Chairman Olson is correct. We control our own software and IT systems at the Supreme Court for the judicial branch as a whole, because we are a separate branch of government. We do have a very small IT and application staff. And so generally what that means is we contract with vendors for off-the-shelf products rather than developing them in-house. If we developed them in-house, we would need substantially more staff and probably more money to get that done. So the systems that we have right now are all off-the-shelf systems from vendors that are being used throughout the nation.
Mr. Chairman,
Senator Nethercutt?
because I love this topic and have been fighting it for years, I did float the idea. There are states, primarily the one to the south of us, that did their own in-house build out. And so they hired their own team of professionals, network engineers, coders, and created their whole court e-filing system. Certainly there are challenges with that too, but it's pretty phenomenal in reality. At least I think it is. And I thought we could do that here in Wyoming as well. Of course, a little bit of growing government conversation could go on, but I do think that talent could have been extrapolated beyond the court, because the type of filing systems are similar for Secretary of State or real property records offices, right? That this is a translatable talent and skill that could easily be done. And then we are not beholden to software concerns or software interfacing or licensing agreements that continued. It's all built in-house organically and maintained that way. And works for some states, again, with challenges, but unfortunately, I have been told by all the powers that be, a terrible idea, and we're already on this horse and it has left the barn. So that's where it stands.
One of the challenges there is how you develop it in-house. If you truly have the expertise and you've got your own coders and they're going to continue to work for you for a long period of time and can revise, then you can do these things. The struggle we have, this is something we commonly do as the state of Wyoming, we're simultaneously cheap and picky. Those are often conflicting. Hard to be both, but we are. What we end up seeing is we RFP something, and then we do want to add the single column to the to the series LLC. Can't do that. That's $1 million, because you literally do have to put out a new RFP and go through the 6-month process, hire a new set of coders. They have to refamiliarize themselves with the code. Or if you want to change one aspect of off the shelf, you have to do that. So it is hard either way. I don't know what the perfect solution is. Honestly, maybe we should have just gone to Colorado and given them cash. That might have been the best solution. Yeah, exactly. And then modify it based on where their coders are and give them some money. I don't know, but I do sympathize with the fact that there's no easy solution, because we don't have a team, a legion of expert computer coders sitting somewhere in Cheyenne, capable, just waiting for a project or anything resembling that.
Mr. Chairman, if I can, this system for the Chancery Court looks really great. I mean, intuitive, robust. How much did that cost?
Mr. Chairman, Senator Nethercott, I believe looking at the quote, and I can't remember off the top of my head the contract because we split out the numbers there, but the quote that we received from the vendor was 2.2 million for Chancery and district courts throughout the state, not just for Chancery Court. So that is for Chancery Court and the district courts throughout the state.
For how long? Is that a subscription or a single purchase?
Mr. Chairman, Mr. Co-Chairman, it is, I believe the implementation cost was 2.2 million, and then there is some licensing and maintenance and support that is ongoing. I think that is right around, I think it's right around $300,000 a year for all courts.
All right. Anything else on your Chancery Court presentation or update?
No, Mr. Chairman, I think that's it.
Okay. All right.
Mr. Chairman. Just to end on a good note, I mean, it is great news that we actually have an electronic filing system, right? So we are being picky and cheap, to be clear, but I think it's important, some of the aspects that we need to get changed. And this is a critical one that's been identified. So, but it's a long time coming, obviously. So it is a great point for the state to actually have some form of electronic filing system after the many, many, many years we've been talking about it. So thank you.
Thank you. And I do think maybe part of the reason why we're so picky right now is because we're the attorneys are anxiously waiting for state e-filing. And so going through our heads right now is everything of what that system's going to look like is really what it is. Because obviously the Chancery Court filings are not going to be through the roof right out, out the gates to the level of concern. But I think, at least for me, my concern is I'm looking at this and I'm seeing, okay, what are the district courts going to look like? And what are these rules going to look like? What is it? How is it all going to flesh out? And so I think we just, it's a nice little trial run, I suppose. Keep working forward on it. So appreciate the update. All right. And actually, I guess before Ms. Butler runs away, and maybe somebody else will answer this question for me, but moving to the next
portion of this topic is our bill draft 22 LSO 0202. We were proposing an amendment that to statutorily that it is my understanding has been addressed in the rules themselves. Or Ben. So before I spend too much time on that bill, if that's true, then I guess we can just move on without the bill.
Mr. Chairman, sure, I'm happy to address this. The Chancery Court Committee has approved language that addresses this issue by empowering explicitly the Chancery Court judges to review and enforce valid form selection clauses. That proposed language will now go to the Supreme Court during its next conference in the month of December, where I expect it will be approved, and then it will become in full force and effect within 60 days of that approval. So we are looking at this issue to be addressed by early February.
Okay. Yeah, you don't have any, do you have any, you don't have any foresight on how that's going to turn out? Do you have any concerns that it may not pass?
Mr. Chairman, of course, I can't speak on behalf of the Supreme Court justices, but I have really no concerns. I think this is a common sense update to the rules that, like I said, was overwhelmingly accepted by the Chancery Court Committee. I suspect it will be positively received by the Supreme Court justices as well.
Okay. Mr. Kaufman?
Yeah, Mr.
serve
Chairman,
on that
I'm happy
committee.
to address that as well. After the last committee hearing, we did work in the committee to address that issue specifically. And I believe, Mr. Birmingham, correct me if I'm wrong, but I think the committee voted unanimously to accept the language proposal, including Chief Justice Fox. I believe she voted. So again, I think something crazy would have to happen for that not to be adopted at this point.
All right. Well, with that committee, we'll just table that bill until January 24, 25 meeting. Any public comment on Chancery courts?
Dave? Thank you. Thank you.
Thank you. Thank you. That's good to hear.
Well, with that, we should take a break and
With,
celebrate.
yeah, with that, we're not only, yeah, we should celebrate on a lot of things.
Right.
So,
Do what?
oh, wait, yeah, sorry.
Oh.
I'd like to take that motion, Senator Nethercott, for the bill draft.
Mr. Chairman, I move for a bill draft to require that the time of filing on the electronic filing system by the attorney is the date of filing. Clark, anything?
I'm gonna file.
And I encourage Mr. Hopkinson to make that sound smarter. Thank you.
Second. Mr. Kaufman, that's what the rule says?
I totally get it.
Correct, Birmingham? I mean, so I kept my mouth shut through all this because I totally understand. But in 2 years of rulemaking, this issue never came up on the committee because we're on an extremely expedited docket. And yes, I totally understand and agree with all the comments regarding the autonomy of clerks to potentially reject. But I think we're gonna have to go deeper than that to get at that issue, because if we're just talking about the time of the filing, that's already in rule.
Mr. Chairman,
I don't think that it is.
Senator, would it be a friendly amendment to add that add language specifically to the bill draft that the clerk cannot influence in any way the time of the filing, something along those lines? We'll just get it in the title and it'll all be fine.
That's exactly what I was going to say, is
Yeah.
that, to the effect of the clerk cannot reject a pleading or a filing. Period.
So if that's a friendly amendment, that's a bill draft, and I bet the title will be great.
Does that make sense, David?
hesitation would indicate.
Mr. Chairman, so to clarify the friendly amendment and how that impacts the original motion, so we want both issues addressed, to require that time of filing is when filed by the attorney, and that the clerk cannot reject a filing. Is that my
Got it.
understanding of
Mhm.
the request?
And obviously, we'll look at that, we'll pull that rule, we'll study the rule and
Right. I mean,
make sure we're looking at it, right?
it'd be helpful to have the rule in front of us to evaluate how that plays out. So what I would suggest is to look at that rule. I don't dispute what Mr. Kaufman says, but I also understand that the clerk can reject the filing and determine that it actually wasn't filed on the date filed because they find a redaction concern. And maybe ultimately it would work out fine for the litigants. But the fact they have to deal with that question because a clerk decided to reject the document is just not prudent. Does that make sense? Okay. Are we doing both?
Mhm. All right. Anything else, committee, on this topic? All right. With that, let's take a 15-minute break.
I think that was a motion, so we need a vote.
Oh, well, it was, unless there's an objection is there an objection?
That's not how she phrased it.
Would you like to
All
vote?
in favor, say it.
All those in
Say it.
favor of that bill draft signify by saying aye.
Aye.
All those opposed?
There we go.
All right.
Motion.
Wow, that was unanimous. All right.
Great moment.
Good job, guys.
Now take a break.
Now we'll take a break for 15 minutes. All right, we are live and we are back. Welcome back, Blockchain Committee. We have one topic left on our agenda for the evening before we get to just final requests and directives, and that's the UCC Article 12 in Wyoming law updates. We have Carla Reyes on, and she's in the digital world.
Do we have her?
We may be a little ahead of schedule because we have her slated for 4:15, so it's possible she hasn't joined.
Mr. Chairman,
Yeah.
she's been monitoring the meeting on YouTube. She did have to attend to some family matters, so she may be able to jump on the call here in a couple minutes, but
Okay.
she's currently not available.
Who else do we have other than Miss Long? So before I turn it over to you, Miss Long, I'm actually going to depart the meeting. I have a children's Christmas program to get to, so I'm going to turn my gavel over to my co-chairman, Senator Rothfuss. Appreciate that. And then you can go over to Miss Long or whatever else you want to do on this topic. So thanks, committee.
Thank you so much, Mr. Chairman. And we also have a handout that I think Clarissa put together. I'm going to pull it up myself. That we can walk through a little bit before Carla gets here. But Ms. Long, go ahead. Oh, my apologies. So we are on the 4:15 agenda item, UCC Article 12 in Wyoming law. We made a request at the last legislative meeting to get an update. As the UCC, the ULC, it was working on the UCC Article 12 updates, and we wanted a little bit of an understanding on what they're doing and how it relates to what we have done with the Uniform Commercial Code. So does that clarify, Senator? Excellent. Back to you, Ms. Long.
Thank you, Mr. Chairman. And when Ms. Reyes comes online, please just flag me and I'll stop. But I'm one of the observers on the Uniform Law Commission working group with the American, it might be the American Law Institute, yeah. So it's quite a big group of people who are working on this, and to create an entire new article of the Uniform Commercial Code is a very big deal. But they have decided to do that for digital assets. And the reason that it's on the agenda here is we were the ones who did that first. This is Senator Nethercott's SF 125. And truly, back then, as you may recall, if you were around, the Uniform Law Commission did not want Wyoming to break ranks and put a lot of pressure on the legislators. You all got I think a nasty gram asking for that to be, that bill to be set back. And in fact, actually, I think that ran up the vote count in favor of the bill.
It only helped.
But it was, I think, one of the flagship pieces of legislation in the 2019 session, and it truly set a precedent. Now, I'm very pleased to report that the Uniform Law Commission has done a complete 180 and actually is saluting Wyoming for being the pioneer in this area. So it was quite a victory for those few of us who understood when they saluted us how hard fought that pioneer comment was. But honestly, it's really truly in a great place. And it is wonderful that the Uniform Law Commission is creating a whole new article for digital assets, because most of the Uniform Commercial Code requires things to be in writing. There's a reason why you need to take a picture of a check when you are depositing it in your bank account. It's because the Uniform Commercial Code requires it to be in writing, and they can have a photograph of it, but it has to be a written instrument. And so this hadn't gone, the Uniform Commercial Code had not undergone an overhaul for electronification in quite a while. And for those who are practicing law, there was an addendum that was added about 20 years ago called UETA, the Uniform Electronic Transactions Act, that allows you to have electronic signatures and has been used in the mortgage industry as a means by which you can create an electronic mortgage note, which is now being done to try to solve the MERS mess that many of us were familiar with from the 2008 financial crisis. So long story short, there's huge progress, but this is quite a big undertaking. Now, the reason that this is on the agenda of this committee is that three states have early adopted Uniform Commercial Code Draft Article 12. It is very likely that the final draft is not going to be very different than where it is in the draft right now. And the final Uniform Law Commission recommendation isn't going to come out until next summer. But the reason why Texas, Nebraska, and Arkansas have early adopted it is because litigation is starting in this area. And there's so much money in digital assets now, $3 trillion worth of value, and there are commercial disputes arising. And I was asked to provide an amicus brief in one in California, and I wasn't going to get involved. I'll keep the facts confidential. But as I perused the district court opinion and filings, it was just obvious to me that this is something that the legislature in California was shirking its responsibility on, because the poor plaintiffs were trying to figure out whether pawn shop law applies to digital assets. And there's a very good reason why, because you're dealing with collectibles, it might, right? But the judges have to try to figure out what law do they apply to even deal with disputes in this area. So Wyoming luckily got out ahead of this. And so the question in front of the Select Committee is, will Wyoming keep what we did, or will Wyoming adopt Article 12? And given that 3 states have already early adopted versions of it, and of course they will have to go back and do cleanup amendments later, is it in Wyoming's interest to go ahead and take out what we did 3 years ago now and replace it with Article 12? The biggest difference between what Article 12 says, which is of course more comprehensive because it allows electronic instruments more broadly, but the biggest difference between what Article 12 says and what Wyoming passed in SF 125 from 3 years ago is there's a 2-year lien cleansing provision in Wyoming's law. And the reason that that's important is it matches the statute of frauds in federal bankruptcy law. And there's an inherent conflict between federal bankruptcy law, which has a 2-year statute of frauds, and then and the Uniform Commercial Code 5-year filing requirement for perfection of security interests. So there's a natural difference in those two things anyway. Federal bankruptcy law has the 2-year period. State commercial law for perfection of security interests has 5, and that's already true. But what we wanted to do in digital assets, given that everything is sped up in digital assets, is to say, if that perfection of security interest hasn't been re-perfected within 2 years, that it's not valid anymore. And the reason, again, is you don't want the lien fights where somebody hasn't perfected a security interest and then 5 years later, someone comes out and attacks whether the lender's security interest was valid or not. In digital assets, it's all going to come down to control anyway. So the whole idea of perfection of a security interest by paper filing is an anathema in the first place. But that's the biggest difference is there's some value to Wyoming to having that 2-year lien cleansing provision. And it is indeed consistent with federal bankruptcy law. But that was not adopted by the Uniform Law Commission in UCC Article 12. So I think LSO did a great comparison of the two. As you read through it, the critical things that Wyoming did are in there. We said you can perfect a security interest in digital assets by control. That was a huge, huge give. And Carla Reyes, who's a law professor at, she's in San Antonio. Yeah. She's fantastic. She convinced them to convince the committee that, because of course the committee wanted to hold on to this concept of paper filing, but paper filing against an electronic instrument, when we just heard about the challenges of getting filings done at Secretary of State's office, most of the filings are going to be done in Delaware because that's where most of the lenders are. And it's not clear that you can get fast filing in Delaware. So the whole idea that digital assets are settling in 10 minutes or 3 minutes in the case of Ethereum versus days to file a perfected security interest, it just doesn't work. And so getting the Uniform Law Commission to come off the paper filing requirement was a huge win. And that's in UCC Article 12. So and there's some conflict of laws things in there as well. UCC Article 12 is definitely broader than what we had. You may recall that when Wyoming got attacked for what we did, the biggest complaint that they had was what would happen if a third party attacked a security interest and sued in Delaware. They weren't actually subject to the forum selection requirements in the creditor's agreement that would have said Wyoming law governs, and they're trying to attack it from a third party who wasn't subject to that agreement in a different state. That was the one thing that was the only, frankly, substantive critique of what Wyoming did. And they do actually, if you'll see in the summary that LSO drafted, if it's a perfection by control, then it is in the state where the creditor agreement is. And that's exactly what Wyoming wanted in the first place. It's where the asset is controlled and the creditor agreement between the debtor and the creditor for the perfected security interest. So they clarified that in a way that it's not as clear in Wyoming law. But long story short, I'm not sure Wyoming should do anything. The question becomes for the committee, given that other states are early adopting this and there are some broader provisions that apply to financial services beyond just digital assets, it may make sense at some point. The question is, do you want to do it now?
Committee, any questions for Ms. Long or discussion?
Mr. Chairman.
Yep, go ahead, Representative Western.
Thank you, Mr. Chairman. So Ms. Long, so just to make sure I understand this correctly, the UCC has a 5-year provision where the one we passed a couple of years ago is 2. And you're saying, given the speed at which obviously the cryptocurrency and just digital asset world moves, if we move it to 5, then that kind of just really slows down the process and kind of defeats the whole purpose. Am I gathering that correctly?
Ms. Long, go ahead.
Thank you, Mr. Chairman. Yes, it does kind of defeat the whole purpose because you have to so-called perfect the security interest what we're saying is you have to perfect it every 2 years. The lender has to perfect it every 2 years. What the UCC draft is saying implicitly is it has to be perfected every 5 years. This may be a distinction without a difference because the reality in digital assets is control of the private key is the critical way to perfect a security interest. So we're talking about, this is literally lawyers dancing on the head of a pin right here. These are edge cases that may not matter.
Ms. Long, though, is it an edge case? I mean, if you have to worry, if you have an asset and you're trying to maybe take out a loan against an asset, we'll say arbitrarily, or use it and collateralize it, it seems that it is meaningful whether you have a 2-year lien cleansing provision or a 5-year lien cleansing provision. Because if, say, you took control of that asset 3 years ago, it's meaningful that it's been cleansed.
Yes.
Okay.
And thank you, Mr. Chairman. One of the other reasons that I think it probably does make sense to keep it in is that some of the holders of digital assets are in Wyoming in their domicile for this reason, because when Bitcoin first came out, there were a lot of lawyers who were very afraid of this lien mess issue because the code itself doesn't say anything about any of these matters. And what Wyoming did was try to make the law backwards compatible with the code. But you can easily see where, because the law might actually conflict with the code, which one is actually going to control. And so one of the things that the committee was looking at when the recommendation came forward, this came from Trace Mayer, as you may recall, is he was trying to figure out what are the attack vectors on the owners of digital assets that once it becomes even more valuable and more valuable, the lawyers are going to start coming and trying to attack your ownership right in your digital assets. And so folks like Trace were very careful to say, okay, if I own digital assets and they've been domiciled in the state of Wyoming for 2 years, then anybody who might try to attack that they actually legitimately owned it because they had an old lien that they might have claimed might have been in force. They just, if it's in Wyoming, there's just no question and that you have outright property ownership from a legal perspective, not just a code perspective of those assets. And that's what the theory behind this was. So if that piece of it gets jettisoned, I think there may be some folks who would wish that we wouldn't have jettisoned it. And they're here and they're domiciling their trusts here, or they're depositing their digital assets in a Wyoming custodian for that protection.
Thank you, Ms. Long. And I'm going to go to Mr. Kaufman for a second. I see that Professor Reyes has joined us also, so we'll go to her in a moment. Go ahead.
Yeah, Mr. Chair, I just wanted to pile onto that and maybe even take it farther than Caitlin did. I actually think this is one of the major selling points right now of the SPDIs, the trusts, and a lot of the companies that are redomiciling here is the 2-year lien cleansing provision. So I will say right now and put a flag in the ground, I'm open to, of course, any of the uniform changes, but I think we have to keep that. I think that would be a gigantic mistake at this point.
Great, thanks. Anything else before we go to Professor Reyes? Yep, I see Mr. Revelle. Go ahead.
Thank you, Mr. Chairman. Just to get an understanding of the other side, what would those who have drafted the 5-year argue is the benefit of doing so? Thank you.
Thank you, Mr. Revelle. Caitlin, do you want to weigh in on that, or we can go to Professor Reyes on that one as well? That might be.
That might be a great place to turn it over to
Transition
Professor
to
Reyes, but
Professor. All right.
the gist of it is that the 5-year period is what is in the Uniform Commercial Code in other situations. And so it's just internal consistency within the Uniform Commercial Code. That would be an exception if we kept the 2-year period.
Great, thank you. All right, one more question. Go ahead, Representative Stith.
Mr. Chairman, for Ms. Long or Mr. Kaufman or both or anyone else, just so I understand, the real innovation in 2019 was we let people pledge their digital assets to a lender, right? Just as collateral. That's huge, great innovation. Can you walk me through an example of, let's say I've got to make it easy, either a non-fungible token of some Michael Jordan making the best shot and it's worth something. I pledge that as collateral for real dollars. I get dollars for that, and it's on some revolving line of credit. What happens to the 2-year mark? Let's imagine here we are 2 years and 1 day. I still owe the bank, the money that I borrowed because it's a revolving line of credit of some kind. The bank has the private key, so they've perfected their security interest. What's happening at the 2-year anniversary that's different? Or I don't understand if I've got control as the lender, why would the passage of time make a difference?
Ms. Long?
Mr. Chairman, thank you. The answer might be somebody who might have owned those unspent transaction outputs, UTXOs, before you might come back and say, hey, I actually had a paper filing in Delaware from 4 years ago for those Bitcoins. And because of the way the UCC works, perfection by filing at the moment until UCC Article 12 is adopted is actually superior to perfection by control. And perfection by control actually doesn't exist. And Wyoming uses the word perfection by possession. But then you end up in litigation with a judge saying, which one is in control, the perfection by filing in Delaware 4 years ago, or the perfection by control under Wyoming law now? And then you get that conflict of law problem. That's the issue. It's an edge case, but again, you start getting plaintiffs' lawyers coming after people with millions of dollars at stake.
Thank you, Ms. Long. Any follow-up, Representative Stith? You good?
No, I think.
Mr. Chairman.
Great. Representative Western, go ahead, and then we're going to get to Professor Reyes.
Thank you, Mr. Chairman. And so, Ms. Long, just to make sure, because it sounds like, practically speaking, again, 2 years is an eternity, but to ensure that should a dispute arise from a plaintiff attorney or whoever it be, that we do have a really good process. And so in relation to the 2-year thing, it's whoever has that lien has to come back every 2 years and perfect that lien and make sure that it's valid, up to date, all that kind of stuff. And if they don't, well, then technically, then that lien might become imperfect and then it can be abrogated, basically. Is that correct?
Go ahead, Ms. Long.
Mr. Chairman, yes, Representative Western, that is correct. we're switching to a new paradigm though, because the old paradigm was that everything had to be perfected by filing. That was the functional reality. Every bank goes and perfects every lien by filing in general in the state of Delaware. That's where most of the UCC filings are done because that's the domicile of most of the debtors in the country. Most of our corporations in Delaware. And so the Delaware Secretary of State is where most of these filings are done, and it's in paper form. And so we're switching from paper form now to possession, control of the private key becomes the method for perfection of a security interest going forward. So your intuition is right. Why are we dancing on the head of a pin? Because whoever controls the private key now has a perfected security interest by definition. But in the old system, it's really this transition period that's going to be the issue, because in the old system, perfection by filing was superior. And there's a 5-year period there.
But it doesn't, because you
Go ahead,
have-
Mr. Kaufman.
I'm sorry, Mr. Chairman. Because you have possession and perfected security interest doesn't mean you necessarily extinguish prior claims, right? And so that's where the 2 years becomes so important, because you have a safe haven now in Wyoming where you can protect yourself from those claims.
All right, and with that, let's invite Professor Reyes to join us. And
Hi, so I am, thank you for inviting me to join you. I wish I could turn my camera on. I'll be able to in like 5 minutes. I'm currently embarked in the nightly Reyes Uber sports service. So as soon as I land at soccer, I can turn my my video on. I apologize for that. Again,
No
thanks
worries.
for having me. If you don't know me, I'm Carla Reyes. I'm an assistant professor of law at SMU Dedman School of Law in Dallas. And I am a observer like Caitlin on the UCC. Maybe I'm supposed to say like Ms. Long, or member of the committee, Ms. Long, more formally, sorry. I'm an observer on the committee. I'm just a real heavily involved volunteer, but I'm not a commissioner and I don't formally represent the committee. So anything I'm about to say is reflects my viewpoints and what not formally the viewpoints of the committee. I have to say that out loud. Okay, so specifically on the topic that you've all been discussing, the 5-year requirement to renew a filing, I agree that is, and so does the Uniform Law Commission drafting committee, frankly, agree that that's onerous and sort of suboptimal for the case of digital assets. Frankly, I agree it's suboptimal in many circumstances and have a paper to that effect that just came out in the Washington and Lee Law Review. But that said, I do want to clarify the Uniform Law Commission draft just a bit. So the Uniform Law Commission draft does allow for control of digital assets as a method of perfection. And it does that, as Ms. Long mentioned, because possession is not, possession of an intangible thing in the UCC that's not possible. So what the UCC does, generally speaking, and not just for digital assets, is for intangible assets like a deposit account, say. Control is the method for perfection. And there are a variety of definitions of control in the UCC, depending on what the asset is, right? So in this context, we've drafted a new definition of control that goes to digital assets, specifically what we refer to as controllable electronic records, or CERs. And sorry, just 1 minute as the doors close. We landed. Sorry, apologies for any background noise. And the key piece of that there is that not only is it a method of perfection, but the Article 12 draft would make it the preferred method of perfection. So although you'd be allowed to continue to file if you wanted to, because that's usually always an option, even in the context of, say, deposit accounts, control would be held up as the preferred method of perfection in digital assets, and filing sort of a suboptimal version. And so if two competing creditors, one perfected by control and one perfected by filing, the one that perfected by control would win. The other thing, and to be clear, the 5-year renewal of the perfection, the 5-year filing renewal, only applies if you file, right? So if I perfect by control, I do not have to like re-perfect by control every 5 years. That's not a thing, right? It's only if I perfect by filing. That said, the way that we take care of this idea of like, how do you extinguish claims, which Wyoming was right to be concerned about in their draft, the way the Article 12 draft takes care of how do we extinguish claims downstream is through the take free rule. And I actually think that the take free rule proposed in Article 12 is more beneficial to downstream purchasers even than a 2-year lien cleansing requirement. And here's why. Basically, it says if you're a qualified purchaser and defines qualified purchaser the way we always define qualified purchaser in the UCC, namely you purchased it in good faith without knowledge that you were committing a fraud against the creditor, right? You're not purposely trying to move the assets around because then you know they're going into bankruptcy, for example. As long as you're a qualified purchaser, then you take free, like period. No 5-year requirement, no 2-year requirement. Just if you are now in control of the asset because you're a qualified purchaser, you take free. And that's a really strong move by the Uniform Law Commission's drafting committee, one that I think took up more discussion space than maybe any other because it's a little bit perhaps I don't know if I'd use the word radical for the Uniform Law Commission ever, but like if we're going to say they were getting radical, like this is them throwing a party, right? So this is a kind of a bold move for them. But so the take free rule is, I think, key, and you take free by taking control as defined in Article 12. I don't know if you have questions specifically on that point because you were discussing it quite a bit there before I move on, but I had a couple of other comments of things that I think are super small commercial law distinctions, but nevertheless quite important between the Wyoming version and the Article 12 version.
Professor, let's open it up for questions then and see if there are any questions on this lien cleansing and take free concept for Professor Reyes. Any questions? Anyone on the screen? I don't see any. I'm sorry, Representative Stith, go ahead.
Mr. Chairman, Ms. Reyes, the traditional perfection by filing provided public notice to the world that this asset is encumbered by a lien. This is, I guess, the very basic question, but if you're perfecting your security interest in a digital asset by control of the private key, for example, how does the public know that this digital asset is encumbered?
Professor?
So the idea is the same as if the bank were to possess by perfection, right? So, or by possession of a tangible object. So I think the case that I teach in secured transaction is like about a gold statute. And the idea is the bank had a secured loan. It was partially secured by this gold statute that they held in their vault. And the purchaser of the statute didn't like bother. They went in, they inspected the statute and didn't occur to them to ask, like, why is it being held in the vault? And if they had just asked, then they would have been told, well, because the bank has a security interest in it and we're possessing it and that's how we perfected. And the bank did not file, right? But they still had a perfected security interest in the gold statute because they had possession of it and it was a means of perfecting. The point being, the act of controlling it should be enough to put the person on notice that it's encumbered. The only people that would need to know that could be possibly badly affected by a control by perfection is other lenders, right? So imagine I'm a secondary lender. Someone's already lent out against this Bitcoin, for example, and I'm a secondary lender and I'm to my debtor, I'm like, hey, prove to me you have this collateral. Right? Show me the money, basically. And the debtor wouldn't be able to do it because the first creditor would have control. Like they would be the ones, if you read the definition of control under Article 12, that had the power either exclusively or shared with the debtor via say a multi-sig agreement where the debtor couldn't transfer without, their permission or the permission of a third party that the two had agreed on. Then if the debtor's like, actually I can't, then they have to explain why or they don't get the loan, right? And that's just a very common, way to perfect under the UCC, that you provide notice by effectively, via practical means, right? Not through a filing. It's actually easier to figure it out. I would venture to guess it'd be easier to figure out that crypto was in the control of the lender rather than searching the UCC one system. Like I said, I'm not always a fan of the UCC one system in general, but don't tell the Uniform Law Commission I said that.
Don't worry, this is all super confidential. Mr. Reville, you have a question?
Yes, thank you, Mr. Chairman. Question for Professor Reyes and maybe Mr. Kaufman and Ms. Long as well. I heard you say earlier that the take free provision would, I believe I understood you to say, would be even better than our 2-year lien cleansing versus the 5-year. I just want to, I'm being unabashedly commercial here for the state of Wyoming. If our objective is to attract business, commerce, et cetera, in digital assets, are you suggesting that the Uniform Law Commission's version with this take free language would be more attractive than our current language?
Professor, go ahead.
So the key is, my reading of the Wyoming law is that it doesn't include a provision directly to the take free rules, right? It includes the provision that was explained earlier about the 2-year lien cleansing, but that just cleanses, like all that's doing is wiping out the effectiveness of a filing, right? That doesn't mean the lien is actually gone, right? There's two different things. One, I enter into a security agreement and create a security interest, which attaches because I fulfill the rules in 920B3, and might not be exact, the exact reference, but I should probably confirm that before I start teaching in about a month. But nevertheless, I make sure that I fulfill the rules of attachment. So I know the debtor has rights in the collateral. They've signed an agreement that is authenticated by the debtor to the effect that we've created a security interest in that piece of collateral. That makes the security interest effective against the debtor, right? Enforceable against the debtor as to that piece of property. Now the question becomes, is my security interest in that piece of property effective against third parties, other creditors that come behind me and want to lay claim to that same collateral as part of their own deal with the debtor? And that is what perfection deals with, right? So even if my filing is invalid under your 2-year lien rule. So 2 years have passed, I forgot to file, that stinks. That doesn't mean I don't have a lien on the crypto. What it means is that my lien isn't effective against third parties. I've lost my place in line against the debtor's other creditors. So I could still lay claim to that collateral. I just have to reassess my priority, right? What the take free rule does is say, once a qualified purchaser has taken control, right, purchased and now, and we use the term control because, and we don't say now owns in the statute because the UCC leaves property law to the state, right? It's property law is governed by state law. The UCC doesn't feel like its role to dictate to states what property law should be. So the actual rights that a person acquires when they take control of a digital asset is left, like it is for any other type of collateral, left to property law of the jurisdiction that's governing in the transaction. But when a person takes control of the collateral, the digital asset collateral, because they're a qualified purchase, they take free of the lien, not just it doesn't just get rid of the perfection of the lien, it gets rid of the lien, right? So that underlying enforceability between the debtor and the creditor is gone. Not just, does that make sense? So in your 2-year scenario, the perfection, say the filing lapsed after 2 years and perfection is gone, that digital asset is transferred to me and I think I'm a qualified purchaser and that's mine, right? Actually, it might not be. It might, the prior secured creditor might still have a claim to it. It's just not a perfected claim. So if there are other third parties that are laying claim, they might get at it first from me, but it's still subject to a lien. Am I making sense? So in that sense, the take free rule is quite important. And it's not for me to say whether Wyoming should keep its 2-year lien cleansing, which is for filing, right? To be clear, in the UCC Article 12 draft, the 5-year rule only applies to filing. It doesn't apply to control. So you take, it's not like you take control and then like in 5 years you have to re-control it, because hopefully you never lost it. So the idea is you would take control, and maybe you also file for some commercial practice. There's a couple of things we're still working out in the committee, like proceeds rules and how it connects to the perfection by control versus perfection by filing. This might particularly be an issue in the context of contentious hard forks, for example, and wondering like, is the new token that's created proceeds of the original, and how do the rules apply to that? And that's not all quite settled in the draft yet, I think. Things to watch for, but what the Article 12 draft does is really try to, and I don't want to speak out of turn. Again, I am not speaking on behalf of the Uniform Law Commission, but what it tries to do is push digital assets closer to the super negotiability that money gets, right? It's not money, and it's not even intangible money, because we have different category for that actually in the draft the Uniform Law Commission is creating than controllable electronic records. So like CBDCs would be some, elsewhere. But what it's trying to do is protect the negotiability of the instruments as much as possible with the take free rule, which is separate and apart from the 5-year lien thing. And again, there are reasons like proceeds, maybe like if you're worried you're going to lose control somehow in the middle. I don't know, maybe you're worried about a bug in the smart contract you use to keep control. And so to make sure there's no gap in your perfection by control, you also file, right? That's another reason why there's a dual option, and you might actually do both, but that remains to be seen. That's going to be commercial practice, what people actually do in real life. But the draft leaves it to the parties to decide what's best for them. I hope that's helpful.
Thank you, Professor. And now Ms. Long has a question. Go ahead.
Thank you, Mr. Chairman. And Professor Reyes, I do have a question that was super helpful. You teach me, every time I listen to you, you teach me new things. And it now occurs, one critical distinction: Wyoming's UCC does give super negotiability to virtual currencies by mapping it to money. As you said at the end, that it's not money, but Wyoming mapped the treatment of virtual currencies under the UCC to the same treatment as money, which is the take free rules. So what that got me thinking about is, what is the transition going to look like? Because every state has to adopt UCC Article 12. That's going to take 10 years. And so you're going to be whittling down these edge cases over time. But so again, that's an argument for us wanting to keep the 2-year lien cleansing provision, because we do have super negotiability, but it's another state that doesn't have that super negotiability where the attack could come from. And so I think we still want to keep the 2-year lien cleansing. But the question for Professor Reyes is, what is the transition going to look like? Because right now, the UCC that's going to be in effect in the slow adopting states is going to give priority to perfection by filing. And then the fast adopting states get priority to perfection by control. I can see that becoming a mess. Do you know the answer, Professor Reyes?
Professor, go ahead. What do you think?
Sorry, I've lost my audio. Give me a second. I hope you can hear me.
We can hear you. Can you hear us? Hello.
Can you hear me?
We can hear you. Can you hear us?
Yeah, I'm sorry. My phone
That's
reconnected to
fine.
my car. I don't know. Can you hear
Gotcha.
me?
Okay. Are you back then? We got you. Yep.
Yeah.
We can hear you. You okay?
Yeah,
Gotcha.
sorry. Yeah. I was
Did
just
you
trying to
hear
do-
Ms. Long's question?
Yeah, she was asking about the transition period, I think,
Yep.
and like what the idea is going to be for in the meantime as people adopt. And I think that's another reason why and I'm again not speaking for the Uniform Law Commission, but I think that's another reason why you keep the dual track. So people are right now already filing, right? So under existing law, Bitcoin, other than in Wyoming and I guess Texas and a couple of other places, but under existing law, unless they've changed and adopted non-uniform amendments to the UCC, cryptocurrency is a general intangible that the only way to perfect in it is by filing, right? And so the existing practice in a large portion of the country is to file to perfect in Bitcoin-backed secured loans. And so part of the reason for keeping the option is that we don't disadvantage those folks. Like they don't lose their place in line in a priority, and just because we've changed the UCC on them. As to the attack, like the attack vector, if I understand the question correctly, the attack is on, the question is about an attack coming to downstream purchasers who think they're qualified, what we are now in Article 12 thinking about as qualified purchasers. And how are they going to be protected in the transition period? And I think the answer is that unless they've been following the rules for general intangibles, like they might not be protected, which isn't a great answer, right? But that's why the UCC is being amended, because that's not a great answer, because right now they're not protected that well. I do think that the point that you made, Ms. Long, about the way Wyoming handled it was to map digital assets to money and borrow the take-free rules from money, is a point well taken. And I think it goes to some of the other comments I wanted to make about differences between the Wyoming version and Article 12 that are relevant, but maybe the finer points are overlooked unless you're the commercial law nerd that I am, or that the people working in the the chair and the reporter of the Uniform Law Commission Committee are. And so the one key factor I think is, so in the Article 12 draft makes the definition of digital asset technology neutral. It does that by bringing it in line with the definition of digital asset that's found in the Uniform Fiduciary Access to Digital Assets Act. So by calling it a controllable electronic record, it's bringing that terminology into in line with the definition of digital assets in that other uniform act, which is obviously always the goal for the Uniform Law Commission, to keep uniform acts, uniform. And so by way of reminder, right, Wyoming has enacted the Uniform Fiduciary Access to Digital Assets Act, where the definition of digital asset is an electronic record in which a person has a right or interest. And basically CERs are just a subset of those digital assets. So Article 12 is looking at uniform laws and statutes across that it hopes states adopt across the topic of digital assets, and saying, look, this is about digital assets, but it's only about one kind, controllable electronic assets. And then it makes the definition of control technology neutral, which I think is important because if read, and it might be that the intent of the drafters aren't clear entirely, but having sat in on the weekly meetings for a couple of years on the work group that defined that created this definition of control, the goal of the technology neutrality is actually to sort of bow or defer to what the system in which the cryptocurrency or other controllable electronic record exists in, to decide what control looks like. So if control, which as defined here is like the power to transfer, right? So it talks about the power to transfer rather than the power to deliver or ensuring delivery like the Wyoming statute does. The reason there being is, say in Bitcoin, like I don't actually have any control over whether the Bitcoin is actually delivered in the end, right? What I do as a user is initiate a transfer, initiate a transaction using my private key. And I hope the network picks it up and includes it in a block and verifies it, and that it's ultimately delivered. But that last, like all of the last part after initiating the transfer, is that I don't actually have any control over whatsoever. But the network recognizes me as controlling the asset because I have the private key, because I have the power to initiate the transfer, and I have the power to exclude others from doing so. And as a result, I have the power to enjoy the benefits of the Bitcoin, right? And to exclude others from enjoying those benefits. So the language of Article 12 digital asset definition, or secure, I should call it controllable electronic record definition, is designed A, to keep uniform things uniform, and B, to defer a bit to the system and its view of what power to transfer is. Because otherwise, rules like requiring delivery to have control, right? So in the Wyoming version, it's control is connected to delivery, the way you would deliver money or you deliver a check, right? That kind of that concept doesn't map quite as well. And we can't prescribe what technological systems are going to be created in the future. It might not look anything like Bitcoin. So if we were to map it directly to Bitcoin or directly to Ether, right, that would be bad too. So it takes a technology neutral approach for that reason, to allow for continued commercial growth and experimentation in the crypto world. We covered the preferred method. Oh, and then the jurisdiction and the governing law part. Ms. Long's right about the initial part of the what we call the waterfall being that if you perfect by control, then governing law is what is in the contract. The rest of that waterfall provision is what commercial lawyers are used to seeing, right? So that type of waterfall jurisdictional and governing law provision is what Article 9 has in any other number of cases, and it's why it looks that way. I think that if there's going to be movement on any of these provisions, like in what the draft looks like, the more substantive movement might be in those. Those drafts are relatively new and haven't really been discussed at any length. I mean, a little bit of length, but in terms of Uniform Law Commission length, not as discussed as the other elements of the draft. Those were the comments I had intended to offer in general, in addition to answering the questions about the 5-year requirement for refiling.
Excellent. Thank you, Professor Reyes. Any further questions for Professor Reyes? One thing that comes to mind is a lot of this isn't mutually exclusive. There's nothing that says that we can't adopt a 2-year lien cleansing provision and the take-free rule as provided in the proposed language and contemplate what kind of the best of both systems would be. Are there other areas, Professor, where you see that maybe there are stronger positions that could be taken or that might be more beneficial to the state to take, where there's, if we were to adopt the rule proposal and then have small side amendments to it that might be valuable, or is that still something that has to shake out in the final rule language?
So I think in terms of like additional amendments to Article, so if you were to take some things from Article 12 and change others, I actually think I'm not in a place to opine on that. If it was me and I was in that place, I would go to the folks relying on your provisions now and ask them, right? I might, and honestly, that's what the Uniform Law Commission does. When they have questions about like, how would this play out in practice? They just go to the people doing it and ask, like, if we did this, how would that affect you? And the one concern that I continue to have about the 2-year provision, but maybe it's, an academic concern and not realize, several of you have stated that folks are relying on that and feel benefited by it. The one concern I would have is if I'm a lender and I take out a secured loan and I take a bunch of collateral in connection with that loan, and I want to file just one thing, right? Say I and maybe I do it both ways. Because I agree with Ms. Long, control is the way to go, right? For a variety of reasons. A, it's going to be the preferred method of perfection. So that's important for your place in line. But B, in terms of enforcing later after default, like you're going to want to have been in control. That's why control is the preferred method of perfection for intangible things, so that you can enforce against it later. It's not like you can go repo it the way you would a car, right? It's harder to find. If you don't have control of it, you may not ever get it exactly. But setting that aside, if I also, for the other reasons I mentioned, worried about a gap for some reason, like maybe I'm new to lending against cryptocurrency, or I'm just generally overly cautious, I'm a risk averse kind of a lender. Or let's say I'm worried about this proceeds issue that I mentioned. Maybe I also want to file. And in particular, maybe I just feel like filing because I also took other things as collateral and I have to file for those. So while I'm filing for those other parts of the collateral, I just add in, right, digital asset or controllable electronic records and into the description of collateral in the financing statement. If I do that, and the rule is for digital assets only that I have to file every 2 years, then I have to do that for all of it every 2 years. And as a lender, that's unfortunate. Lenders already have difficulty sometimes with the 5-year rule. The 5-year rule is a bit of a place where litigation happens a lot for forgetfulness or, messing up the filing, thinking you're doing it in the right window, but you're not, et cetera. So that's one practical concern I have. I don't know if it's a real practical concern because that's not one that I've done a survey of industry participants on, but it is one that might be a good question to put out into the world to see if in commercial practice, if people are taking more than one type of collateral and how they would feel about having to file every 2 years for everything versus every 5. Because people don't like to refile. I mean, and depending on the policy, again, not my place to say one or the other, because it depends on your policy priorities. If your policy priority is absolutely to look out for the consumer and not for the creditor, maybe you don't care if it's more difficult for them, right? But if you're trying to strike a balance, then it'd be something to consider.
Great, thank you. Further questions or discussion? Further questions or discussion? No, I think I hear soccer players at that point in time, maybe.
Sorry.
Right. Well, thank you, Professor. Appreciate your time today. And thank you for all of your help and involvement and engagement, not just in this space, but also in DAOs and digital identity and everything else that you've been a part of our working groups and efforts. So thanks once again for taking time out of your day and from the soccer game. Go team.
Oh, thanks so much for having me again. And I mean, and thanks to Wyoming for being a leader in the space. I mean, you guys step out and take risks that you don't have to, except that you're really genuinely interested in having law that works in this space. And I think that's fantastic. And to the extent that I'm even this much helpful in answering questions, I'm happy to do so. Plus, it's not a game; it's just practice, and it's fine. And it's fine.
Excellent. All right. Well, thanks a lot. Take care, and hope to see you tomorrow.
Thank you. Thanks
Bye-bye.
very much. Bye.
Ms. Long, go ahead.
Mr. Chairman, that was really, really helpful. And it indicates to me that those who are early adopting might actually have to do more overhaul in the future than I thought. And I was just conferring with Mr. Kaufman as well, just to try to figure out what his gut tells him. It seems like it's probably just not ripe yet for us to adopt this. We already have really good law. And yes, it might conflict, but maybe bring this up next year. And I suspect we will end up adopting UCC Article 12. It is broader than what we have in Wyoming, but it sounds like it's not quite ready yet.
Yeah, it seems to me this is probably something we want to look at during the next interim and figure out what the right approach is. And it's not necessarily adopted wholesale. Article 12, maybe we pick some of our good bits and maybe the 2-year lien cleansing provision along with take free is the sweet spot to achieve both continuing representation of the interests of those that have domiciled here while at the same time trying to take the best of both worlds. But yeah, I think that's a good discussion for the next interim. Any other thoughts, committee? Anyone? I see Joel up there. Go ahead, Mr. Reville.
Thank you, Mr. Chairman. Just a quick question to Ms. Long, if I could, please. Ms. Long, you mentioned that we do have take free, I believe you said, as it relates to digital currency. And I assume, I'm not an expert here, but I assume we do not as it relates to digital securities or tokens. And does that create a near-term issue in your mind or not? Thank you.
Ms. Long, go ahead.
Mr. Chairman, thank you. Mr. Revel, the answer is we do have take free. We get there a different way for digital securities. And the way we get there is that securities are, there's an issuer involved in securities, and there's a take-free rule under Article 8 of the UCC for securities, and it comes through your intermediary, your securities intermediary. And so for digital securities, there's going to be a securities intermediary. That securities intermediary might be a DAO, but there is an intermediary, and you get the take-free rules through UCC Article 8 in electronic form. We get there a different way. In other words, basically, there's really not functionally a big difference between UCC Article 12 and what Wyoming already has, either for virtual currencies or digital securities. I should have made that clear earlier. There is a difference for digital consumer assets. So under Wyoming law, we make the distinction between the three types of assets: virtual currency, digital securities, digital consumer assets. Digital consumer assets are general intangibles under Wyoming law. The only way to perfect that a lender can perfect a security interest is by filing. And so that is one place where UCC Article 12 is better than Wyoming's law. Yeah, they're actually surprisingly similar, even though they get their different ways, the two different laws, which is also part of the reason why I look at it and say, there's not much functional difference except for that 2-year lien cleansing provision. We're going to want to keep that, I think, as a state, because unless and until there's a really clear transition, you can easily see how if Delaware takes 10 years to adopt UCC Article 12, and Delaware law, which is where most of the creditors and debtors are, says that perfection by filing is superior, you can see how the states that adopt this perfection by control thing, you just get a clash anyway. And there's no way around that. So we want to keep that, I think, the 2-year lien cleansing provision. That's my thought.
Go ahead, Mr.
Chairman,
Kaufman.
the other thing I just wanted to say before I forget it next time that we might want to flag for the interim is I've been conversing with a lot of attorneys that are starting to have concerns about the NFT space and the differential between the tokenization of an asset and the underlying asset, which might have different security lien legal applications. And so some of the attorneys I've been talking to don't think that that's necessarily covered by what the UCC is even contemplating. And so I'm not suggesting I have any answers, but it might be an opportunity for us to lead once again and maybe just think through that and make a distinction, if nothing else. So I don't even know yet how to go about that, but I just wanted to flag it before I forgot.
No, I appreciate that. And we've talked about it a number of times, and it is a challenge because sometimes your NFT is representing an underlying asset. Sometimes your NFT effectively is the direct asset. And it would be very reasonable to treat them differently depending on that circumstance. If the NFT is the asset, our statutes aren't bad, right? I mean, this works pretty well as a digital asset. You could add it as a clarify that the NFT that is the digital asset works for all of these provisions. But if your NFT is representational of an underlying digital asset or an underlying asset of some other type, then do you go with the underlying asset? However you would treat the underlying asset, or does the fact that you have an NFT representation of ownership of that asset? Yes, well, the digital image, exactly. So that's a digital asset, but it's not even a digital asset in a lot of the way that we're talking about. And this happens right now all the time. So there are struggles, and we should lead, and we should come up with the answers and provide bright lines. Go ahead, Mr. Kaufman.
I have no good thoughts, but this, because with the recent emergence of the DAOs, we're doing a tremendous amount of work with the idea of governance tokens and completely separating, the economic interests under our LLC Act away from the token and just assigning that those governance rights to it. So the question has been brought up: can you attach security interests to just a governance token? Right? There is no underlying economic value, but there is arguably economic value insofar as it controls the entity and makes decisions. And so, again, I have no answers for that, but we have definitely had those discussions, and it seems to be coming up more in the tokenization space. Now, when you get to something like tokenization of a piece of real estate, that's a little easier, right? Because everyone wraps their head around how you file a mortgage, and the token might represent a share of that ownership, but it doesn't represent, right, the underlying asset. So, but I think in the securities context, maybe digital art. I haven't really done much in that space necessarily, but the governance token space is where it's really come up.
Well, with governance token, I mean, ENS token was just released 2 weeks ago, 3 weeks ago, whenever that was released. And it is a governance token, but at the same time, it's highly valued and it's probably, you know, $50 per ENS right now. I don't know what it is today. So that's $1 billion, any $1 billion. I don't know what its market cap is right now. Governance token, where it's not theoretically supposed to be a security. It is just governance over the ENS system, Ethereum name service or system service.
But the collective of that controls the asset.
That's exactly right.
Yeah.
So what is it? Go ahead, Ms. Long.
Mr. Chairman, as you were saying this, Mr. Kaufman, I was thinking if we do anything this year, it might be in this area of actually adding a new category in Wyoming law that captures NFTs, because NFTs under the current taxonomy in Wyoming law would be considered a general intangible, and therefore the perfection of the security interest on them is by filing, and now we're stuck with this paper thing again. So maybe that's the one thing we do that gets us to the finalization of UCC Article 12 and then revisit Article 12 later.
Well, it certainly is possible. If we're working within our existing digital asset definition and we just want to add some version of NFT to it, which it gets into this conversation though, where we have to draw a bright line between an NFT that's representing property, real property ownership or something along those lines versus an NFT that is representing a digital asset, that might be something where it's just adding a couple of words to our existing definition, and that might be doable in this timeline. I don't know that we can tackle the deeper problem. Go ahead, Senator. Yeah, no, that is a challenge. There's no question about it. And taking the amount of public testimony and wrestling with this is going to be a challenge. It's critical, and we had it on our interim, but we just didn't end up. We've had plenty of things to go to. Go ahead, Ms. Long.
Mr. Chairman, the way to do it, which would be the easiest way to do it, is to define the NFT where there is no underlying asset as a virtual currency, and then it's mapped to money and it gets the super negotiability. Again, it's a roundabout way, but that it wouldn't be many words, but I take your point. It's late in the session to get testimony.
Right. Right.
So the only, there will be nothing now. So that leaves us something drafted in January.
In theory, just the one. Mhm.
Right, and so I just think that there's no opportunity to publish.
Yeah, we need to do it. We need to spend a lot of time on that. Agreed. Any additional discussion? And it is a challenging area. And to me, the NFT space right now really is the Wild West, because so many billions of dollars of commerce related to NFT are currently ongoing. And yet I don't know that anybody really has an answer to what they are under property law or the commercial code. Go ahead, Ms. Long.
No, Mr. Chairman, actually, I think it would be a digital consumer asset under Wyoming law. I was just going to add a special shout out to Governor Gordon, who, when the Constitution DAO got going and we had a shot at getting the copy of the Constitution that was going to go somewhere, and the 15,000 participants of Constitution DAO were going to vote on it. I thought Wyoming actually had a very, very good shot at attracting that to the American Heritage Center at UW. We started a little online campaign for that, and Governor Gordon got involved, but unfortunately Constitution DAO got beaten out by Ken Griffith.
Lost the bid.
Lost the bid, yeah.
All right, anything else in this topic? All right, let's close our discussion then of UCC Article 12 in Wyoming law. And all we have left today is any directives to staff or discussions with staff and then requests. Anything that you need from us?
Mr.
Any
Chairman,
clarifications? Go ahead.
we do have Brendan Marr, who would like to comment on UCC Article 12.
My apologies. Yep, I didn't open it up to general public comment. So let's bring in Mr. Marr for a quick comment. Go ahead.
Hello, can everyone hear and see me?
We can hear and see you, Brendan. Welcome. Good to see you.
Oh, wonderful. I'll try to keep it very brief as the hour is late. My name is Brendan Marr. I'm an MIT Media Laboratory alumnus from 1998. I'm on the DAO working group, the Digital Identity working group, and the exploratory NFT, what we were exploring in a few meetings ago. Not quite a working group yet, but I have a number of comments that I think might be helpful. And the first and foremost one is that sticking with the idea of NFT, the minor comment is NFTs are going to be used not just as assets, but also for identity. So one has to be very, very careful in terms of how the NFT language gets rolled out, because there are many groups of people that are looking at it in these ways. The other things that are actually very important to think about is it really comes down to the elephant in the room. All of this stuff, all the things that we're talking about, at a root level, the issues about control and perfection of control and perfection of principal authority come down to what's missing. And it's the ideas around the difference between electronic signing and cryptographic signing. So what's interesting is that we have laws that make this legal, right? We can cryptographically sign things. We have UITA. When I was looking in and at drafting additional laws for or statute provisions for the Digital Identity Act, I kept plowing through Wyoming's statutes and of course came across 4021 101, where it talks about a security procedure. And I was thinking, well, this is great. It's very nice. It mentions the terms include a procedure that requires the use of an algorithm or other code, identifying words, encryption, right? So that's where it gets that cryptographic signing, which is fundamentally different than electronic signing. Electronic signing is how we sign PDFs. The problem is all of these things are signed with cryptographic signatures, which are fundamentally different. They are not images, which we have with electronic signatures. They are random numbers that are generated that have some tweaking to them and how they're formatted. But ultimately, they get used as addresses, public addresses. They can be used for identities, for names, all the issues that we've been having and thinking about and talking about regarding registered agents. But when we get to the heart of the matter and perfection of control, we're going to need to solve the definition, as Carla Reyes has indicated, in a technology neutral way. A clear definition of cryptographic signing. Quite frankly, just so that the legal community understands and knows the difference, because there are fundamental differences, and we'll never be able to solve these two different parallel worlds where we have signing of transactions, signing of NFTs, signing of smart contracts, DAOs. All these things come down to a misunderstanding of the definition of an electronic contract and a cryptographic contract, or signature, I should say. I'll leave it at that, and I'd be happy to take questions, but this will come up with again, data trusts and all sorts of things. And it certainly is in the realm of what we're talking about here in terms of securitization and statutory trusts. And we're not just talking about signing of a individual coin, right? But we're talking about the agreements around that. So I'll leave it with that, but I hope that is helpful.
Yes, thank you, Mr. Marr. Any questions for Mr. Marr? All right, seeing none, thanks. And I know we'll see you tomorrow, so look forward to that. Have a good evening. Back to the committee. Any further discussion on UCC Article 12? Any further public comment before we actually close at this time? All right, I'll do the right order this time. So public comments closed, and back to our directives to staff or discussion with staff. Anything that we need? David, no. Wow. And that answers that question. Okay. It's the first time I've been kicked out of a meeting that way before. All right, welcome back, everyone. Yeah, so moved, right? Okay, and with that, then we're adjourned for the evening. See you all tomorrow morning at 8:30 right here.